Over the last 5 years, my step-by-step tutorials have helped thousands of California entrepreneurs to start their small businesses while taking the frustration and confusion out of the process. In this video, I will be compiling all of the essential information you need in order to start, operate, and run your California small business. You will learn how to start a business in California step by step, which type of business entity is right for you and how to start that type, how to plan for taxes, how to obtain permits, licenses, and registrations needed to be state compliant in all industries, and much more. This is it, your one-stop shop for getting your California business started. Bookmark this video and refer back to it over and over again during your first year in business, and I promise you your business startup will be exponentially easier. I'm Ginny Silver, the founder of the California Entrepreneur Collective and contributing author to Entrepreneur Media. Before we get started with the info dump, I want to introduce you quickly to a fantastic tool for California entrepreneurs that you can access instantly. If you are starting or if you own a small business in the state of California, then I want to invite you to join the California Entrepreneurs Collective. This is something that is the first of its kind where you have instant access to all of the tools and information that I personally wish I had access to, but the best part is that it has a money back guarantee. The library of resources has new tools added every month. It consists of a variety of workbooks, editable templates that you can utilize in your business immediately, action plans, step-by-step instructions on how to accomplish common business goals, and much more. Today, I'm going to walk you through each and every step that you need to do in the state of California in order to start a small business. To start a sole proprietorship in California in 2023, it can seem overwhelming, but I'm going to simplify the process and walk you through step by step as simply as possible. I also want to encourage you to click the link down below to join the California Entrepreneurs Collective, where you will get access to exclusive sets of tools, done-for-you templates, guides, action plans, coaching, and community. If you don't know what a sole proprietor is or if it is the right type of business for you, I want you to click the link in the video description down below where I walk you through that decision. Now, after you're planning, after you have decided what type of business you're going to do, in order to form your business legally, the very first step that you're going to undergo is going to be to register your DBA, your Doing Business As name, also known as your fictitious business name statement. Now, this step is only going to be necessary if you plan on operating under a business name that is different than your first and last legal name. If you're operating under just your first and last legal name with nothing else added, then congratulations, your first step is already complete. But for those of you who need to register your Doing Business As, you're going to want to do this as the first step in the process because all of your other paperwork will require you to list your DBA. Now, this is easy to do, and it's going to require 3 fairly simple steps. Number 1 is going to be to complete and submit the application. Number 2 is going to be to pay a small fee, which varies from county to county. Number 3 is going to be, in most counties, you will be required to follow the recorder's instructions to publish your DBA in a local newspaper. To complete step number 1, you are going to go to the website calgold.ca.gov. Next, select your city and your county and then enter in your business type. This is going to give you a full list of all of the possible things that you need to do in order to start your business. Scroll down until you see fictitious business name or DBA statement, and then click the link that's provided. Now, this is going to take you directly to your own unique city or county application for filing your fictitious business name statement. Here's the same application, but for a different county. So you can see it's a different form, but CalGold will link you to the correct form for your county. Now, what you need to know here is that you will need to select the type of business entity that you are, or it's going to ask you for business conducted by. You will either select sole proprietor or individual since you're filling out this application as a sole proprietor. Now, once you have submitted the form and you have paid the fee to file your fictitious business name statement, you are required in most counties, but not all, within 30 days of filing to get your statement published in a newspaper, which is in general circulation in the county, stating that your fictitious business name was filed. Now, there are some specifics here, but what you need to know to keep this simple. Now, once you receive confirmation from the county clerk recorder's office, which is where you file this statement, they will typically send you out an additional paper letting you know this requirement and then letting you know the contact information for several newspapers that they recommend. All you need to do is call or email one of those publications, let them know that you need to have your fictitious business name statement published, and they will know exactly how to help you. The second step for you is going to be obtaining an EIN, an employer identification number. And yes, this applies to you even if you don't actually have or won't have employees. This is not a necessary step. However, I do highly recommend doing this because obtaining an EIN is fast, it is free, and it's going to protect you from using your own personal social security number on a wide array of paperwork. Do this as the next step in the process because other paperwork is going to ask for you to provide either an EIN number or your personal social security number. So it's best to have this set up so you can go ahead and just start using an EIN number and protect your social security number. Now, this is easy and free, and it only requires a simple application through the IRS. Do not pay a third-party service to do this simple task. I'm going to leave the link on where to apply for this down below, and you're going to click the blue button to apply. Next, you're going to be prompted to enter in what type of legal business structure is applying for an EIN. You will select sole proprietor unless, of course, you're a different type of business entity. Next, it's going to ask you to confirm that you are a sole proprietor or to select that you are a household employer because you hired someone to do household work. So they want you to differentiate between the two. Next, enter in the requested information, and they will ask you for your social security number here, but that is the last time that you're going to need to use it because you will therefore be able to utilize your EIN number going forward. Step number 3, which is to obtain a seller's permit if you are required to do so. Now, the CDTFA is the California Department of Tax and Fee Administration. And they state that if you sell or lease merchandise, vehicles, or other tangible property in California, even if it's temporary, then you're required to register with the CDTFA, and you must pay sales tax on your taxable sales. Now, when you register with the CDTFA, you're registering and receiving a seller's permit. This then allows you to make those sales, but also requires that you collect and remit sales tax to the CDTFA. Now, many of you might not be sure if you specifically are required to get a seller's permit for your own unique business. So first, ask yourself, are you selling tangible products and are you making 3 or more sales per year? If you are selling tangible products and you are making 3 or more sales per year, then the CDTFA states that you in most cases would be required to receive a seller's permit. So what about those of you that have a mixture of things? Let's say you are selling a tangible product, but you are also selling and charging for your labor. If you are charging for labor, labor is subject to sales tax when it results in the creation or future sale of a tangible product only. For example, if you make a ring for a specific customer, you are creating tangible personal property. Therefore, the total amount you charge would be subject to sales tax. On the other hand, labor costs for making repairs, such as resetting a diamond, for example, are not taxable since they do not result in the creation of tangible personal property. Now, for those of you who are conducting 3 or more sales per year and who are selling tangible property, there is an exception. If you are utilizing a marketplace facilitator to conduct your sales, and the marketplace is the one collecting and remitting the sales tax, then you do not need a seller's permit. Now, a marketplace facilitator is a third-party company that hosts your shop and collects and remits the sales tax every time you make a sale. So how do you know if the company, the platform that you are selling on is a marketplace facilitator? I want you to check and see if they charge and keep the sales tax. If they are keeping the sales tax themselves, and this is something that never passes through your hands, then they are in most cases a marketplace facilitator. In order to make sure, check the seller's frequently asked questions on whatever marketplace you are using to conduct your sales. Most likely, they will have a section specifically devoted to taxes. Now that you have decided whether or not you're required to actually obtain a seller's permit, the next step is going to be completing the online application. But we're at cdtfa.ca.gov. Now from this page, we're going to scroll down and we're going to click on register or apply for a new business activity or location. We're going to click selling items or goods in California, which is applying for a seller's permit. Now, if any of these other categories are applicable to you, you'll make sure to check them and click next. Next, you're going to be asked a series of questions. Are you selling alcoholic beverages? Are you selling tobacco products? Are you selling tires? Are you selling covered electronic devices? Go ahead and click next. Does your business activity include fuel products, selling lumber, retail sale of prepaid wireless, selling or manufacturing of lead acid batteries? And click next. What type of business are you registering this activity for? Now, this is where you're going to select the entity type for your business. So next you're going to be asked some identification questions. You're going to be asked for either a taxpayer ID or a social security number, and you're going to go ahead and enter that in. Next, you're going to be asked here for an FEIN number. Now, an EIN number is a federal employer identification number. That's not required for you. So if you do have one, you can go ahead and enter it in here. And if you don't have one, you can go ahead and skip it. The same is true for the SEIN, which is a state employer identification number. You can go ahead and skip that as well. Next, are you changing from one type of business entity to another? Enter which type of ID you are going to be inputting, and you are going to select the state for that driver's license number, and you're going to input your driver's license number here. You are going to confirm that yes, you would like to apply for a seller's permit and click next. Now, next you're going to be asked if you would like a temporary permit. Now, temporary permits only last 90 days. So most likely you will want to answer no to this question. You will answer no to this question if you want a permanent ongoing seller's permit. But if you want your permit to expire after 90 days, you'll select yes. Next, you are going to be asked, will the business be accepting credit card payments, yes or no? If you select yes, you're going to be asked for a merchant card processor name and a merchant card processor account. Now, you can advance through the application without entering in this information. So you can skip it and bypass it if you do not currently have your credit card processor set up. However, if you do have it set up, this is where you will input that information. Next, they're going to ask you, are you making internet sales? If you select yes, you will then be asked, are you making internet sales through a third party? A third party would be a marketplace such as Etsy, eBay, or another seller's marketplace. If you select yes, then you are going to have to provide the third party site which you plan on using. Now, if you do not quite have your website all put together yet, you are going to enter in your domain where you plan to have your website. And under the third-party site, if you don't have that set up yet, you can just type in the generalized third-party website, and that should suffice. Next, you're going to be asked for your NAICS code. This is the code for the type of business that you are operating. So you are going to do a keyword search for your type of business. Type in the type of business that you have. You'll go ahead and click on the corresponding code, scroll down, click OK, and it's going to input it for you. Go ahead and click Next. Next, you'll be asked, does your business conduct any of the following business activities? Answer yes or no according to your business. Next, you're going to be asked for location information. So, is the location of your business temporary for a temporary event? Yes or no? You will then enter in your business street address, city, state information. Next, you're going to be asked for your doing business as, your DBA, or your fictitious business name statement. Now, your business name needs to line up with what you have listed on your business license and with your DBA or your fictitious business name. So if you are a sole proprietor and you're doing business under your own first and last name with nothing extra, nothing changed, added onto it, then you do not need to file a DBA statement. You can go ahead and enter in your first and last name here. But if you are doing business under a different name that is not your first and last name, you will need to type in what that name is here, as well as file a DBA with your city. Please note that stating your business name here on the seller's permit does not legally claim that as your doing business name with your city. That is a separate filing that you'll need to do. Next, you're going to enter in the date that you would like your seller's permit to start. Are you buying or transferring an existing business? Now, you are going to type in your projected monthly sales. Now, the CDTFA doesn't need an exact number here. You are just, most likely, if you're filing for a seller's permit, you're just starting your business. So give a really rough estimate. You will later claim the actual amount when you file your sales tax. So don't stress over this amount. Just go ahead and do a rough estimate. Do you anticipate $0 in monthly sales? Hopefully not. Projected monthly taxable sales. So your monthly sales are the total amount of sales, including tangible items and services and anything else you might be taking in money for. Now, your taxable sales are going to be the amount that is subject to sales tax, meaning tangible products or services that were worked into the creation of a tangible product. So go ahead and estimate that here. Do you anticipate $0 in monthly taxable sales and products that will be sold during the course of business? Go ahead and enter in a few of the products that you anticipate to be selling. Next, you are going to select where you do and keep your records. So if it is the address you provided, you are going to check that box. And if you are going to be keeping your records at a different address, you will click Add a different address. Next, you're going to be asked to provide your suppliers' information. This is going to be the companies that you purchase supplies for to either create your product or resell to your clients and customers. Now, if you're a new business, you most likely might not have your sellers ready to go. You may not have already purchased from them, but what they want here is they want one supplier at a minimum that you plan to purchase from. So if you aren't sure, look somebody up. Look up a supplier, and whatever you plan on selling, find someone in that category, take their business information, and go ahead and use it here. Next, they're going to give you a summary, including the start date of your seller's permit and your reporting basis. Now, a reporting basis is the frequency at which you must report your sales tax and pay your sales tax to the CDTFA. Now, most people will be on a quarterly reporting basis. Now, I acknowledge that I've read and understood the above account information. Select yes and click next. Next, you're going to provide your own personal name, your role in the application, your email address, as well as some contact info. Next is your declaration of intent. Make sure you read this and make sure you check it and click next. This states that you are intending to register for a California tax or fee permit license and or account with the California Department of Tax and Fee Administration. Once you click next, you are going to be confirmed that your application has been submitted. Now, once you have completed filing your application, you want to then create a registration for an account on the CDTFA so that you have an online portal to manage your account. So what you're going to do next is you are going to go down here. You're going to click sign up for a username. Click that you are the owner of a business. Click next. Now, most likely you have not received a security code yet. They must mail you to your mailing address a security code, and you must then use that code to finish the online registration process. So you're going to click yes or no if you've received the code. You are going to click next. You are then going to input your information here. Select your account type, which will be sales and use tax, and input your account number here. Click submit, and then within several weeks, you will receive in the mail a letter with that security code so that you can complete the process of setting up your account online. Step 4 is to obtain a business license. Now, this can also be known as a business tax certificate. First, you're going to visit calgold.ca.gov. I'm going to link the website down below. Enter in your city name as well as your business type and click search. From here, you're going to locate the section that refers to a business license and click the link to the website. This is going to take you to your city's specific area where you can apply for a business license. Each city is going to do things a little bit differently, but in general, business licenses are renewed once a year on a calendar year basis. Business license start date is going to be the first date that your business started in that particular city. Sole proprietor, you will be asked on here to provide either an EIN number or a social security number. If you do not have an EIN number, then providing your social security number as a sole proprietor is fine. I'm going to show you the City of Santa Clara's application. This one is one that was easily accessible for me to show you. And in general, they're going to be asking for the same pieces of information, although the exact fee and layout might look a little bit different from city to city. They're going to first ask you for your business name as well as a DBA if you are operating under a different doing business as name. They're going to ask for your business address and your mailing address. Now, if you are operating out of your home and you have a home-based business, then this would in fact be your home address, unless you have registered for a virtual office. If you have registered for a virtual office and you are specifically paying for virtual office services, then you will utilize that address. However, a PO box is not a business address. So for those of you wondering if you can use a PO box here for business address, the answer is no. You can, however, utilize that PO box for your mailing address. Next, you're going to be asked, do you claim an exemption to pay business taxes? Now, the only businesses that are going to be exempt from paying taxes are going to be those who are eligible for a 501c3 status, meaning that you operate for religious, educational, scientific, or other charitable purposes. They do not give net income to any private individual, such as the owner or the founder. So in most cases, this does not apply to you, and you would check no. Next, you would check that you are a sole proprietor, and because you're a sole proprietor, you may or may not have a Next, you're going to check that you're a sole proprietor, and then where it asks for your federal tax ID, your FEIN, you will either include your federal EIN number if you have one, or if you do not, then you may include your personal social security number. Next, enter in information about the business owner, which is you, and you're going to enter in your seller's permit number. If you have a contractor's license in the class, you're going to enter that in, and then enter in the information about your business's location. The fee for obtaining a business license or business tax certificate is going to vary from city to city, but you can see an example of Santa Clara's fees here just to give you an idea of what you can expect to pay. Now, there's one last step that you're going to need to do in order to register your small business as a sole proprietor in the state of California. Now, this step is to obtain zoning clearance. This is going to go for you whether you have a commercial space, you're operating out of a separate office space that is not residential, or if you're operating as a home business, you must obtain zoning clearance from your city's planning department. Now, the majority of you are going to be seeking out obtaining a home occupation permit. This is going to allow you to legally establish or enact limited business operations from within your home. While the majority of cities and counties will allow you to operate a home business, there are some restrictions on exactly what types of businesses you can operate, and some cities and counties might not even allow you to do any business operations in your home. So don't skip this step. If you're getting zoning clearance for a separate studio or office space that is not your residential home, then you are going to need to undergo a fire inspection annually. If you are simply seeking out a home occupation permit because you're going to be doing business out of your residence, then most cities will grant this for a minimal fee and no annual fire inspection will be needed. The first thing you're going to do is you're going to visit CalGold at calgold.ca.gov. Type in your city or your county and then select your business type. From there, you're going to scroll down until you see the Land Use Permit Zoning Clearance section. This is going to tell you the phone number of the department that you need to contact in order to obtain that zoning clearance. Click through to the website or call into the office. Specific restrictions, fees, etc. are going to vary from city to city or from county to county. But just to give you an example, I'm going to pull up the city of Sacramento's information here. Their application fee is $156. They have some specific requirements in terms of how many employees, how often employees can be working there, how many customers can be there on site, etc. They also will state exactly what types of businesses are or aren't permitted, as well as some other regulations to make sure that they are preserving the residential neighborhood as opposed to turning the street address into a busy storefront. The Community Development Department in your city is either going to have this application listed on their website, or when you call into their office, you can obtain it there. Once again, each city is going to have its own unique application, but just to give you an idea of what to expect, here's a brief example of some of the questions you're going to see. Now, while I have labeled this as the last step in the process of registering your sole proprietorship in the state of California, I want to make sure that you understand that specific industries, counties, and cities will have their own unique requirements. So I want you to make sure that you understand that this is a generalization and that you always want to defer to calgold.ca.gov to look up your city and county and industry's specific requirements. Now, while your legal registration paperwork and documents might be complete with the state of California, this is not the only video that you need to watch because there's important information that you need to know going forward in the next video here. Make sure you watch this video next so that you know how to prepare. Having a sole proprietorship means that you and your business are one and the same. There's no separate entity formed, so therefore all assets, including money, your house, and your car, which looks like a turtle, all belong to you and your business. There is no separation here. Because you and your business are one and the same, when money comes into your business and you make a sale, then that money automatically passes on through to you. When it comes to paying taxes, all of that money passes on through to your personal tax return. That income is going to be claimed on your personal tax return. It's then going to be subject to 3 different types of income taxes: federal and state income taxes, as well as what is known as self-employment tax, which equates to 15.3% and covers Medicare and Social Security. This 15.3% applies to your total. Let's compare this type of business to a different type called an LLC, a limited liability company. Forming an LLC separates the business and the business owner. They are no longer one and the same and are 2 completely separate entities, and each has their own assets. So that money, your house, and your weird turtle car are completely separated and protected from the business's liabilities. Now, in terms of taxation, you have 2 different options of how to be taxed. Option number 1 is the default. When money goes into your business, in order to pay yourself, you simply need to do what is called an owner's draw, transferring money over to your personal bank account from your business bank account. You can also write yourself a check from your business account. This is the default method, and you're going to be taxed again as a pass-through entity. Your LLC is going to be disregarded by the IRS, and that income is going to go onto your personal tax return, and you're going to pay federal, state income taxes, and self-employment tax. Now, option number 2 requires you to file additional paperwork with the IRS and elect SCorp taxation status. You and your business are still separated, you're still an LLC, but you're going to be required to hire yourself as an employee. This means that in order to pay yourself, you're going to have to issue payroll to yourself. And that comes along with taking out payroll taxes. Payroll taxes are going to include federal and state income tax, as well as FICA, which includes things like Social Security and Medicare taxes. Now, there's a potential for tax savings here because you're required to pay yourself a reasonable salary, but any profits that are left can be transferred over to yourself in the form of distribution. While distributions are taxable income, they are not subject to that 15.3% self-employment tax. This means that you can save yourself that 15.3%, and it can equal a big tax savings. But first, you need to make sure that you are able to hire yourself as an employee, which means you're going to have a payroll system in place. You're going to have to be compliant with your state employment requirements, such as getting workers' comp insurance, and you have to pay yourself a regular, reasonable salary. If you are starting a business in the state of California, you may be considering starting an LLC, a limited liability company. But what does it cost to start an LLC? Let's look at specifically what is going to cost to start an LLC in the state of California. First, as of 2023, there is a $70 California Secretary of State filing fee for registering your LLC. You'll be filing an Articles of Organization document with the California Secretary of State. Filing this initial registration is $70. Next, you're going to be required to file a California Statement of Information. This initial filing is due within the first 90 days of formation and currently is $20. Next, you're going to be required to get an EIN, an Employer Identification Number. All LLCs are required to do this, and there is a $0 cost. You can do this on irs.gov and get it free and instantly for no cost. Do not pay a service to get your EIN. Next, you're going to be required to have separate business bank accounts. You cannot use your personal bank accounts with an LLC. So any additional fees that are associated with your particular bank for opening these accounts are going to need to be taken into consideration. Next, let's look at what is going to be required to keep your LLC up and running. The first thing is going to be due at the first year that you file your income taxes for your business, and that is going to be an $800 LLC tax to the state of California. The Franchise Tax Board charges an $800 minimum LLC tax annually. This tax is paid every single year that you have your LLC, regardless of whether or not you turn a profit or how much money you make. You're going to be required to pay this $800 LLC tax. The only exception for this is that currently for 2023, the California Franchise Tax Board is waiving the $800 tax on your first year in business. This does not apply going forward. It is set to end on 2023 as of this point in time. However, if your business grossed over $250,000 in that tax year, then you are going to be taxed differently as shown on this chart. Additionally, in order to keep your LLC active and compliant, every other year, biannually, you're going to be required to file an updated statement of information. This is going to incur a $20 fee on years where you are required to file it. Lastly, there are going to be some other expenses that you need to plan for that aren't necessarily requirements for starting an LLC, but rather requirements or strongly recommended requirements for holding a business in your city, state, and county. The first is holding a business license. In most cities, you're going to be required to hold a business license. This is also known as a business tax certificate. In order to see if you are required to hold a business license, visit calgold.ca.gov and you can check your local requirements there. Here you can also find the direct link to that business license application and the department where to submit it, and you can also locate in that website the specific fee for your own city. These fees vary from city to city, but in general, plan on a fee between $50 and $200. Next, you're going to be required to have a business address on public record with your registration as an LLC. Now, you can be a home-based business and use your home address, and this of course would be $0 in additional cost. However, many LLC owners and business owners in general do not want to have their personal home address on public record for the world to see. In this case, you would then need to factor in any additional office costs for having a brick and mortar office for yourself, or factor in costs for a virtual office service. This is different than a P.O. box. In the state of California, you cannot register a business to a P.O. box or a simple virtual address. You must have a service that provides you with a virtual office service where you are actually allowed to register your business to that address that you are using in lieu of your personal address. Next, if you are going to be operating your business under a different business name from what you originally filed on your LLC registration, then you will need to register a DBA, a doing business as name. This can also be called a trade name or a fictitious business name. In the state of California, most counties refer to this as a fictitious business name statement. In the state of California, most counties refer to this as a fictitious business name statement. Fictitious business name statements are filed with your county clerk recorder's office. And in order to check on the specific amount that you have to pay to file this, head over to calgold.ca.gov where you can locate that office for your specific location. Once you register your DBA, you also are going to, in most cases, be required to have that DBA published in a local newspaper. This fee will also vary depending on the publication, but again can range anywhere from $25 up to $150. Next, take into account who your registered agent will be. LLCs are required to have a registered agent on record. A registered agent is essentially the person or representative responsible for receiving all business-related information and contacts from the government. Now, you can be your own registered agent, and in this case, it would be a $0 additional fee. But keep in mind that just with your home address being used for your business, if you are your own registered agent, then your contact information, including your address and phone number, will be on public record. Because of this, many businesses choose to use a professional registered agent service. If you use the link that I have in the description down below to form your LLC with InkFile, then you receive your registered agent service free for a year. If you are someone who is paying for your registered agent service, then this fee can vary depending on which company you choose to use, so make sure you research it in advance. Next, you should strongly consider getting business insurance. There's a variety of different types of business insurance that will apply based on the type of business that you operate, what industry you're in any specific industry, city, or county requirements for actually conducting business. I have a video that lists the major types of insurances linked down below. Next, you're going to want to think about how you are going to record keep. It is going to be a legal requirement that you keep business records. How you do so has a lot of flexibility in it. So you may decide to get a DIY software such as QuickBooks, or you may decide to get a bookkeeping service or a CPA. All of these are going to range in their cost, so make sure you research that up front. Lastly is any industry-specific licensing that you need to obtain and renew. This is going to be very, very varied according to what industry you are in. Some business industries will have specific licensing and permits that you must be registered for, and others do not. So head over to calgold.ca.gov, check on your industry, and see what may be required. Lastly, if you're going to be starting an LLC, I want to encourage you to start it the fast and easy way using a service that I love called InkFile. InkFile allows you to start your LLC in about 5 minutes, and it charges you $0 plus the state filing fee to simply register your LLC. They also give you a year of free registered agent service. It is a fantastic way to get up and running quickly and easily without the headache. Affiliate link is included down below. I do receive a commission every time that someone signs up with InkFile, so it's a great way to help my channel to create more video content and also start your LLC quickly and easily. Hey guys, it's Jenny Silver, and today I want to tell you everything you need to know if you are considering forming an LLC in the state of California. Not only am I going to go over what an LLC is, what 3 questions you need to ask yourself before you form an LLC to know if it's right for you, I'm going to show you the benefits of an LLC, but I'm also going to walk you through the full process of forming your LLC and then show you a trick of how to do it quickly and easily. First, today's video is sponsored by Taylor Brands. Taylor Brands is an all-in-one solution for your business. Taylor Brands is the world's only comprehensive one-stop shop for small business owners, making the process of creating and running a business simple, streamlined, and easily manageable. The platform of guided tools includes LLC services, EIN, domain, website, logo builder, merch, trademark, and much more, enabling business owners to start, manage, and grow their businesses with efficiency, ease, and confidence. Before I get into all of the information I'm going to share with you today about LLCs, I want to first show you how incredibly quickly and easily you can form your LLC using Taylor Brands. Now, a lot of business owners are scared off from the process of forming their LLC and never actually get started because the process can seem incredibly daunting, confusing, and it has multiple steps. They don't want to do it wrong, so they don't start. I want to squash that false belief from the beginning of this video because forming an LLC is going to take you just a couple of minutes in just a few clicks, and I'm going to show you how using Taylor Brands. Don't worry, I'm going to also show you how to do it yourself the hard way later on in the video for those of you that want to do it yourself. So I'm going to be entering in what business name I would like so that we can check the availability. As long as it shows that this business name is available, we're going to click next. Select which stage in development your business is in. Then I'm going to enter in what my plans for timeline are with actually launching my business. Next, I'm going to type in what sort of industry my business will be in. Start typing it in and then it will automatically pop up with some suggestions. Next, we're going to choose all that apply, whether we are selling physical goods or providing professional services. You can also type in your own if you don't feel either applies. Enter in whether or not you plan to hire employees within the upcoming year. Next, enter in the postal code where your business will be operating in. And you're going to be selecting where you will be serving your customers. You can choose online, at a brick and mortar store, or on the go, and what additional plans you have for your business that you need to still complete. Now, if you have completed some steps for starting your business already, then you'll want to enter these in here, showing what you have already completed. For example, if you've already obtained an EIN from irs.gov, you're going to check that box here, and then you'll be prompted to enter in your EIN later on. Great feature is going to be offered to you here for free, and this is a customized business plan based on the information that you have already entered in. Next, you're going to enter in your personal contact information. This is going to be for the purpose of updating you on the status of your paperwork. So enter in your first name, your last name, your phone number, your email address, and a password. This is not information that's going to be on public record. Rather, this is merely information that Taylor Brands is going to use to contact you to update you on the status of your registration. Now, before you form your LLC and start with the paperwork, you're going to need to select which package with Taylor Brands you would like to choose. Now, while forming it for free is great, I want to recommend that you actually do a higher level package because you want to make sure that you stay compliant without having to keep track of the deadlines and do additional paperwork with questions in your mind. You want to make sure that you are able to know when things are due and stay compliant without a doubt. Updating to the essential package here is going to not only form your LLC in the state of California, but it is also going to upgrade you to expedited processing within 2 business days. It is going to ensure annual compliance with your mandatory reports and filing updates. It's also going to establish for you an operating agreement. So basically everything you need to make sure that you are compliant and that you remain compliant is included here. First, what is an LLC? An LLC is a limited liability company. When you start a business, you need to choose what type of business entity you are going to form. The most popular ones that you hear frequently are sole proprietor or LLC. Unlike a sole proprietorship, an LLC creates a completely separate business entity, separate from the owner. It separates the business and the business owner, and therefore separates the business finances and your personal finances and assets. Creates a layer of protection between your business liabilities and your personal assets. Another key aspect of forming an LLC is that it opens up the door to choosing how your business is taxed, and this can potentially result in huge tax savings for business owners. Let's compare an LLC versus a sole proprietorship, 2 very common ways to start a business. When you first start making self-employed income, you are automatically defaulted to what is known as a sole proprietor. This means that you are earning self-employed income and that you and your business are one and the same. There is no distinction between a business entity and the personal self. Therefore, all of your business finances and your personal assets, and any liabilities that have to do with your business all pass through to the business owner. All of your self-employed income is going to be declared on Form Schedule C of your income tax return. All of this income will also be subject to self-employment tax, which is 15.3%. Self-employment tax includes a portion for Medicare and a portion for Social Security. The IRS automatically defaults you to a sole proprietor, and no additional paperwork needs to be filed to be a sole proprietor. However, within your county, city, and state, there still may be additional registrations and licenses that you need to file in order to operate a legal business in your area. Now, forming an LLC is a little different. It has additional benefits that sole proprietorships do not offer. A limited liability company known as an LLC is going to require you to complete a series of steps in order to form a completely separate business entity. This means that the business owner and the business are no longer one and the same. You are forming a completely separate entity, and along with forming that separate entity, you're going to create a line of protection between your business liabilities and your personal assets. LLCs also have the ability to choose how they are taxed. When a sole proprietor files their income taxes, they're going to claim that self-employed income on Form Schedule C of their income tax return. They are then going to be subject to pay 15.3% of self-employment tax on that net amount of their earnings, in addition to federal and state income taxes. That 15.3% breaks down into a portion for Social Security and a portion for Medicare. A single member LLC is automatically going to be taxed the same way that a sole proprietor is taxed by default. The LLC is disregarded for tax purposes, and all of that income passes through onto your personal tax return. That is the default. However, an LLC also has the option to change how they are taxed by doing an additional step. LLCs have the option to elect SCorp taxation status. Being taxed as an SCorp means a lot of different changes for your business, which can result in huge tax savings. Electing SCorp tax status is going to mean that you are going to have to hire yourself as an employee for your business. You are going to have to pay yourself a reasonable salary for that work, and that salary is going to be subject to payroll taxes. Because you're an employee of your business, you are going to follow all legal rules, guidelines, registrations, and taxes that are associated with hiring an employee and putting them on payroll. But because you're only required to pay yourself a reasonable salary for the work that you're doing, the additional profits of the business that are not paid to you in salary are going to be transferred over to you in what is called an owner's distribution. An owner's distribution is basically a transfer of that additional profit to the owners of the LLC. Now, this is where the tax savings lies, because those owners' distributions are not only not subject to payroll taxes, because you're not paying the employee, it's an owner's distribution, but they also are not subject to self-employment tax. So you essentially are saving 15.3% on that owner's distribution amount that you would otherwise be paying to self-employed income taxes. So how do you decide if an LLC is right for you? I'm going to make this super simple because there are just 3 questions that you need to ask yourself. The first question is, do you have any personal assets that you want to separate from your business? Do you have anything such as a car, a home, or any major assets that you want to make sure are protected and completely separated off from any business liabilities such as a potential lawsuit? If so, then you will want to consider an LLC. The second question to ask yourself is, are you okay with paying an annual tax to have an LLC? LLCs are going to be charged an annual tax every single year, regardless of whether or not they are actually profiting, making money, or turning out sales and customers. In the state of California, you are going to be subject to pay an $800 annual LLC tax. And if your business earns over over $250,000 a year, then there is an additional LLC fee based on a scale according to how much your business earns. And the third question I want you to ask yourself is, will your business be earning $100,000 or more? If your business is regularly and consistently earning around $100,000 and up, then you want to make sure that you are maximizing your tax savings. And converting to an LLC and then electing SCorp tax status is going to make sure that you are able to save that self-employment tax amount of 15.3% on all of your owner's distributions. Now, this only makes sense if you're in a higher level income bracket regularly and consistently, because there's going to be a series of fees that come along with hiring yourself as an employee. Next, let's go over what costs you should expect when forming and maintaining an LLC. First up are your LLC formation fee. You'll be registering your LLC with the California Secretary of State, which charges $70 to register and form your LLC. Additionally, the California Secretary of State will also require you to submit a statement of information. This statement of information costs $20 to file, and you not only have to do it when you form the LLC, but you also will have to file an updated statement of information and pay the $20 fee every other year. Next, you're going to need to plan to pay your annual LLC tax. In the state of California, this is an annual $800 fee charged every year through your LLC's income tax return. For registering with the state, you're also going to be obligated to pay your local business registration fees. Registering for a business license in your city is most likely going to be required. This ranges from city to city and can be anywhere from $30 up to $150. You'll need to check with your specific city in order to know the amount. Look this up on calgold.ca.gov. Now, if you plan on operating your business using a different name than your LLC's original formation name, then you are going to have to register what is called a DBA, a doing business as statement, also known as a fictitious business name statement. Now, this is another fee that will differ from county to county, and you can find your exact fee for your location on calgold.ca.gov. Registering for a seller's permit if you plan to sell tangible goods, as well as registering for an EIN, an employer identification number, are both free. Having an EIN is going to mean that you do not need to use your social security number on your business tax paperwork. An EIN is also going to be required for you to open up business bank accounts. And having a business bank account and separating your business and your personal finances is required for an LLC. Next, LLCs are going to be required to have what is known as a registered agent. A registered agent is a contact person whose personal information, their name, their phone number, and their address are all registered on public record and available for anyone to search. Therefore, any legal documentations that need to be sent over to your business always have a point of contact on public record. This person needs to be available during business hours. When forming an LLC, you can be your own registered agent. However, many LLC owners do not want to have their personal information on public record, and they choose to hire a registered agent service to do this professionally for them in order to protect their personal privacy. Hiring a registered agent service varies depending on which service you select, but in general can cost a few $100s a year. Next up, you'll want to consider costs associated with your business address. LLCs are going to be required to list 3 addresses: that registered agent's address, the business mailing address, and the physical business address. In the state of California, it is not allowed to register a business to a PO box. You must have a physical address. Therefore, if you are someone that wants to protect your home address and you do not have an external store, studio, or office space, then you are going to need to hire the services of a virtual office. A virtual office is different from a virtual address or a PO box. A virtual office is going to be a service that specifically states that they allow you to register your business using their physical address that they give to you. The cost for this also varies depending on which company you choose to use, but usually is a minimal cost between $5 and $40 per month. Okay, so you have decided that you want to form an LLC. Now let's go over your must-have checklist of things that you need to have in place before you can form an LLC. Number one, you want to make sure that you have a business name in mind. If you want to operate under a different name later on, you can always file an additional DBA, doing business as statement, and connect it to that LLC. But the name that you form your LLC under cannot already be in use and registered in your state. You'll want to make sure that you visit your Secretary of State's website and use their business lookup tool in order to search the name that you would like to have and see if it is currently in use. Next, you want to plan for your business address. LLCs are going to be required to have 3 different addresses: the address of a registered agent, a business mailing address, and a business physical address where the business is located. Next, make sure you know who your registered agent is going to be. A registered agent is a contact person whose personal information, their name, their phone number, and their address are all registered on public record and available for anyone to search. Therefore, any legal documentations that need to be sent over to your business always have a point of contact on public record. This person needs to be available during business hours. When forming an LLC, you can be your own registered agent. However, many LLC owners do not want to have their personal information on public record, and they choose to hire a registered agent service to do this professionally for them. And lastly, you will need to have an EIN, an employer identification number. LLCs are required to separate their business finances and their personal finances, which means that you're going to have to be opening a business bank account. Business bank accounts are going to be required to be opened using an EIN, an employer identification number. Now, that sounds a little misleading because you might not have employees, but you do not need employees in order to obtain an EIN. EINs are obtained from irs.gov for free and only takes just a couple minutes to get one instantly. Next, I'm going to walk you through all the steps that you need to do in order to form your LLC with the state of California. First, you're going to go to bizfileonline.sos.ca.gov. On the left-hand side under Business Entities, you're going to select Register a Business. Next, you're going to select the File Articles of Organization option, and here you'll see that there is a $70 fee. Next, you're going to be prompted to create an online account, including your first name, last name, contact info, and organization. Next, you're going to be asked to agree to the terms and conditions as well as the privacy warning here. So go ahead and click that you agree and that you have read these terms and click on to the next step. The submitter information here is listed as being optional, but if there are any questions regarding your submission, then this is the person whom the Secretary of State's office is going to contact. Next, you'll need to confirm that you are not going to be providing any professional services because an LLC in the state of California cannot actually provide professional services. Next, you're going to be asked if you have previously reserved the name of your LLC. Unless you filed a specific name reservation previously, then your answer here will be no. Next, you're going to type out how you would like your limited liability company to be named. Now, the state of California has some naming specifics. Number one, your business's name must end with the words limited liability company or the abbreviation LLC or LLC with periods following each letter. You can also opt to abbreviate the words limited and company so that it is LTD and CO. In the state of California, your LLC's name may not contain the words bank, trust, trustee, incorporated, Inc., corporation, corp, insurer, insurance company, or any other words suggesting that it is in the insurance business. State of California insists that your name cannot be in any way misleading to the public. For example, your LLC cannot imply that it has any sort of false government affiliation and cannot use words such as agency, commission, department, or bureau. Lastly, your LLC's name cannot be similar to any pre-existing LLCs. Next, you're going to be asked for both a street address and a mailing address. Please make sure that you note that the street address cannot be a P.O. box. It must be a physical street address. And yes, this can be registered to a virtual office if you have paid for that service somewhere. Your mailing address, however, can be listed as a P.O. box. Next, you're going to select if you're going to have your registered agent be an individual or if it's going to be a California registered corporate agent. Next, you will specify if your LLC will have one manager, multiple managers, or if all members of your LLC will be managers. Next, you can select if you would like to file this documentation immediately or if you have a specific file date in the future. Next, it's going to ask you here for any additional optional attachments. In most cases, you may not have optional documents to attach, but that is there just in case. Next, you will be asked to review all information and documents submitted, and then you will be asked for an organizer signature. The organizer is whomever is filing this paperwork online. So if you're filing it for yourself, then that would be your name. Next, you will finalize the $70 processing fee payment and specify if you do want to order a certified copy. I do recommend ordering a certified copy because it can come in helpful as you file additional paperwork for your business later on down the line. Now, after you have submitted the articles of organization online, the next step is that you're going to be required to file your initial statement of information. Every year, LLCs are required to file an updated statement of information with the Secretary of State. Once your articles of organization have been processed, then you're going to file this initial statement of information by returning to the Secretary of State's website once again. On the left-hand side, you're going to click on File Statement of Information, and then you will locate your business, sign in, and you can complete the document online there. Next, LLCs are going to be required to file a BOI report, a Beneficial Ownership Information Report, through FinCEN, a government organization. It provides information identifying the individuals who directly or indirectly own or control a company. In 2021, Congress passed the Corporate Transparency Act, which requires this BOI report to be filed. Companies that were created or registered in 2024 will have 90 calendar days to file their BOI report, whereas companies created or registered after January 1st, 2025 will have 30 calendar days to file their BOI report. To file your BOI report, go to fincen.gov/BOI. Click on File Report using the BOI e-filing system. Click BOI e-filing to get started and select File Online. Here you'll be able to enter in the information specific to your unique business and file the report. Now, if this seems confusing or overwhelming, you are not alone. This is a lot of steps to handle. And for many business owners, this is the reason why they stop in the process of forming their business and never actually create the business. They never open their doors or they never convert to the protections of an LLC because they get stopped in the process. There are a lot of steps and it can seem confusing and overwhelming. So compare how many steps I just showed you to form the LLC yourself versus how simple it is with Taylor Brands. Now, after you form your LLC, there is still some work to do because you want to make sure that even though you have formed your LLC, your next step is making sure that you're going to be compliant with your city and your county's business registration requirements. This is super important. I want to introduce you to the best website to streamline and simplify this process is calgold.ca.gov. This is an all-in-one government-run website that is going to list out every single permit, license, and fee that you need to do for your specific county and industry. But not only that, it is going to provide you with links to the websites of those departments. Next, you want to make sure that you set up your business bank accounts. LLCs are required to separate their business and personal finances, and you want to make sure that you have a business savings and a business checking set up and in place before you start the cash flow going in and out of your business. Which leads me to the next must-do after forming your LLC, which is setting up a bookkeeping method. You are going to need to keep adequate financial records of the money coming in and out of your business. All of your expenses are going to be used later as business deductions on your taxes, and you're going to be required to keep financial records. Next, make sure that you have investigated what types of business insurance you need for your specific industry and location. Some industries are going to have a set of required insurances that you need to have in order to get jobs and work in that industry, and that customers and clients will need to see proof of. While other types of insurance are optional but should be strongly encouraged, such as general liability insurance, errors and omissions insurance, and others. Lastly, make sure that you understand what is needed in order to stay compliant and keep your LLC active. LLCs in the state of California are required to file an updated statement of information biannually. Every other year, you must file an updated statement of information with the California Secretary of State, even if your information has not changed. Additionally, for compliance, you're going to need to make sure that you have an operating agreement for your LLC in place, because in order for those legal protections to be ironclad, you must have an operating agreement. Lastly, you're going to be obligated to pay your annual LLC tax and file your LLC tax return. Okay, everyone, I hope that was helpful. Let me know in the comments if you have any questions, and most importantly, make sure you click the link in the video description in order to form your LLC with Taylor Brands. Let's talk about how to pay yourself as an LLC. For those of you that have started or who are planning to start an LLC, a limited liability company, you may be wondering exactly how you are supposed to pay yourself. Making sure that you do this properly is incredibly important because you do not want to trigger an IRS audit or other problems in your business. Before we get started, I want to make sure you understand that I am not a CPA or a tax professional. It is extremely important that you consult with a CPA or a tax professional with regards to any financial planning for your business. This video is going to specifically focus on paying yourself as a single member LLC. First, we need to identify what an LLC is. An LLC is a limited liability company. This business entity structure offers both the protections of a corporation for those business owners that want to protect their personal assets, then they may choose to convert into a limited liability company. Because there are these different ways that you can set up your LLC, there are also different payment methods that you'll need to comply with. As a single member LLC, you can be taxed one of two ways, either as a disregarded entity or as an S corporation. A single member LLC that has not completed a form to be treated like a corporation in the eyes of the IRS is called a disregarded entity, and the LLC's activities should be reflected on its owner's federal tax return. First, let's talk about those of you who are single member LLCs. You did not fill out that extra paperwork in order to elect SCorp status. The method that you're going to use to pay yourself as a single member, not SCorp LLC, is going to be called an owner's draw, also referred to as an owner's distribution. The first step in doing this the right way is going to be to make sure that you have completely separated your business finances and your personal finances with completely separate accounts. Your business is going to take in the payments and sales money into your business checking account. In order to do an owner's draw or an owner's distribution, you are simply going to do a transfer from your business bank account over to your personal account. Now, this can be done anytime, in any frequency, and in any amount. There's no limitations in terms of how many transfers you can do or any regulations in terms of amount of transfers, frequency, etc. Doing this is very simple, but you have to make sure that you have separated your business and personal accounts because you do not want to trigger an audit. A limited liability company also grants you the ability to elect what is called SCorp taxation status. Electing SCorp taxation status means that you and your business are no longer one and the same, that you and your business are now separate taxation entities. So why would someone elect SCorp taxation status? Well, when you are taxed as a sole proprietorship or as an LLC that did not claim SCorp status, then you are required to pay self-employment tax. Self-employment tax is 15.3%, which covers Medicare and Social Security. Entities will be taxed this 15.3% on their total profits from their business. Now, once a business chooses to elect SCorp taxation status, they complete a form and make the transition. That means that they will no longer be self-employed. Instead, they are going to be an employee of their own business. Because their business and themselves are no longer taxed as one and the same, the owner must then enroll themselves into payroll. This eliminates the requirement for your business to pay self-employed taxes on that total profit. Why? Because as an employee of your own business, you are going to be on payroll. Payroll will be subject to payroll taxes. Therefore, self-employed tax will not apply. Therefore, self-employed tax will not apply to the total profit of the business, but rather will apply only to the portion that you pay yourself as a reasonable salary. A reasonable salary is typically defined by most CPAs as about 30% or more of your total profits. This can essentially save you a lot of money on taxes. However, it doesn't make sense for every business to undergo SCorp taxation status until they reach a certain point of profitability and predictability within their business. For those of you that have elected SCorp status, you have completed that form to be taxed as an SCorp, you are going to have a much different payment method. As an SCorp, you are required to have yourself as an employee on payroll. You are going to need to set up a payroll system and pay yourself a reasonable salary. Most CPAs define a reasonable salary as at least 30% or more of your business's profit. You're going to hire yourself as an employee and put yourself on payroll. Now, if you do not have a payroll software, then the easiest way to put yourself or your employees on payroll is a tool that I love called Gusto. Gusto is an all-in-one payroll solution, and it's super easy to use and user-friendly. Use the link that I have down below in the video description, and it will send you a $100 bonus. Now, you are permitted to give yourself additional owner's distributions, meaning extra money from the business outside of your reasonable salary transferred over as an owner's draw. For those of you that are considering electing SCorp status for your business, I want to make sure that you consult with a CPA prior to doing so to ensure that it is really the best decision for your business. Now, if you're paying yourself and earning money from your business, it is incredibly important that you understand how to plan for taxes. So I want you to click on this video next, where I cover 6 important things that you need to know about tax. If you are a business owner who owns an LLC and you are trying to keep your personal home address private, you do not want that information shared on the internet, then you may not realize that it might already be public. When you form an LLC, you're required to have 3 addresses for your business submitted with your LLC paperwork, which will then be on public record. These addresses and the information associated with your business is all searchable at the Secretary of State's website. Information is searchable and can be shared by third-party organizations that want to create business listings, try to get after you to buy their products and services, and a variety of other uses. The information is there for the public to find. As an LLC, you're required to have a primary business address. This is where your business is registered to. You are required to have a business mailing address, where your mail is sent to, and you are required to have a registered agent and their address on public record. Your registered agent is the one that is often overlooked. A registered agent is someone who is an actual person who is assigned to your business to be the contact person for all important government documents. In case the government needs to get a hold of your business, a registered agent is required to be listed on public record to be the recipient of all official communications. Now, many people choose themselves or a member of their business to be the registered agent. But this means that the address of that individual and where they can be reached is going to be on public record. In many cases, individuals mark themselves as the registered agent, submitting their home personal address as their address, not knowing that this is going to be on public record. In order to check and see what addresses are listed on public record for your LLC, you are going to go to the Secretary of State's website and use their business lookup tool. Here you can search the name of your business and you can view your public information that is available on file. And here you can see what is listed and on file for your business's primary, mailing, and registered agent address. In order to change that registered agent information from being your own personal information, you will need to hire the services of a professional registered agent. This is relatively inexpensive and easy to set up. There are a lot of choices out there, but I have linked my favorite registered agent service for you in the video description.
Today we're going to go over exactly what you need to do annually to keep your California LLC up and running and active. You cannot start an LLC because you are a cat. Now, for those of you who have not yet started your LLC, I want to refer you to the link in the video description down below. This is a tool called InkFile, and I absolutely love recommending InkFile. They allow you to start your LLC for just $0 plus the state filing fee, and they provide a year of free registered agent service. It makes it super fast and easy. You can start your LLC in about 5 minutes. The link below is an affiliate link, which means that my channel does receive a commission anytime that you make a sale. Why are you so fierce today? I just want love. Fierce. After you form your LLC, the California Secretary of State's office is going to require you to file an updated statement of information biannually. So this means every other year you're going to be required to submit an updated statement of information. Next, you're going to be required to pay an annual state LLC tax. In the state of California, the LLC annual tax is $800 unless your business grosses $250,000 or more annually, in which case you're going to be charged on a different scale. Next, you're going to be required to have in place an operating agreement. In the state of California, you're not required to submit this operating agreement anywhere. In order to have an active LLC that actually has all of the LLC's protections legally enforceable, your business needs to have an operating agreement in place. Next, you're going to be required to file your annual income taxes. Your federal and state income taxes for your business are required to be filed annually. Next, some of you may be required to pay estimated income taxes. Once you pay your first year of income taxes for your business, if in the next year you anticipate that you will owe $1,000 or more in taxes, then you're going to be required to pay estimated income taxes. These are broken down into 4 quarterly payments and are due throughout the year. It is a breakdown of your anticipated tax bill due for next year, paid in advance. Next, you're going to need to continue to have an EIN, an employer identification number. Now, once you set this up, it's fast and free initially with the IRS. Now, there's no ongoing maintenance for this. You do not need to reestablish an EIN. Once you have already set it up with the IRS, it's fast, easy, and free. But you need to make sure that you have it in place to be compliant. And next, you're going to be required to maintain accurate financial records for your business. Your personal and business finances need to be completely separate, meaning that you will need completely separate business-only bank accounts, and you do not mix personal and business transactions at all. In addition to simply having those separate business bank accounts, you also need to keep financial records. Now, the IRS and California Franchise Tax Board do not give you specific requirements in terms of exactly how you must keep those records, so you have a lot of flexibility there. You can maintain a personal spreadsheet. You can use a DIY software such as QuickBooks or Xero, or you can utilize the services of a professional bookkeeper or accountant or CPA. Next, you're going to be required to notify the California Secretary of State's office, as well as all of your other business registration documents, if you have any specific changes, such as change of owners, change of business locations, change of address, etc. Next, if you did not trademark your LLC's name, then you will need to continue to monitor that you are not infringing on anyone else's trademarks, because there's always the possibility that someone else could trademark that name. Next, make sure that you're in compliance with your local business requirements. So your city and your county are going to have their own set of requirements and registrations required in order to operate your business. Hopefully these were initially set up when you first started your LLC, but if you are not sure what these are, make sure you visit calgold.ca.gov. There you can look up your specific industry, city, and county and see a list of requirements on those levels that you must maintain for your business. And as a bonus, I'm going to throw in one not required but highly recommended, is that you maintain business insurance. If you are not sure what type of business insurance you need, I cover those exact. Now, if you're not sure exactly what types of business insurance your business should have, I cover the main types in this video right here. For those of you who have not yet started your LLC, I want to send you over to the link in the video description down below. This is a tool called InkFile, and it is a service that I absolutely love. It will allow you to set up your LLC professionally and in about 5 minutes. The best part is that they charge you $0 plus the state filing fee, and they provide for you a full year of registered agent service. Now, this is an affiliate link, which means that my channel does receive a commission anytime you make a purchase from that link. It's a great way to support the channel so I can continue to create free tutorials for you.
If you have a California LLC, you are going to be required to file your LLC's tax return with the California Franchise Tax Board this April 15th. For those of you who are using a tax software such as TurboTax to do this tax filing, it is incredibly important that you understand that you must pay the Franchise Tax Board that $800 LLC tax separately. You are obligated to send that payment yourself. TurboTax or whatever software you are using will not do it for you. I'm going to show you exactly how you can pay your California LLC annual tax. California LLCs will file Form California 568 to send in their limited liability company return of income to the Franchise Tax Board. This form is included in your tax software or through your accountant and will be included in your tax return. While Form 568 is e-filed and submitted automatically in most tax softwares, what is not submitted automatically is the annual $800 LLC tax payment. This payment must be done separately, and you need to make sure that you submit it to the California Franchise Tax Board on time in order to avoid costly penalties and fees. If your LLC made more than $250,000 during the tax year, then you will have to also pay an additional LLC fee as shown here. If you're using a tax preparation software such as TurboTax, you're going to have a form within your copy of your tax return that looks like this. It is going to contain the information that you need in order to pay that LLC tax. Included in your copy of your personal tax return is your LLC tax voucher, Form 3522. You can see here that the amount of payment is going to be $800 and that it is payable to the Franchise Tax Board as shown in the address up above. This voucher and your payment can be mailed to this address, or you can pay it online, and I'm going to show you how to do that. On the California Franchise Tax Board's website, you're going to click on the Pay option, and here you're going to select how you would like to make your payment. Next, select that you will be using Web Pay for Business, and then you will be asked to enter in your entity type, which will be a limited liability company, followed by your entity ID. This entity ID number is going to be your California Secretary of State registration number for your business. This number is located on your payment voucher. You can see it right here. But for those of you that may not have access to your payment voucher, you can access this number available on the Secretary of State's website using their business lookup tool, as it is public information. Next, you will be asked to enter in your period beginning date and your period ending date. This information can also be located on your voucher shown right here. Once you have entered in this information, next you will be asked about payment details and the date you would like to schedule the payment.
Hey guys, it's Jenny Silver, and today I want to explain to you the different types of taxes that you're going to experience and need to plan for as a small business owner in the state of California. The first type of tax is your business tax certificate. Now, this is also known as a business license. However, the purpose of this business license, which is actually called a business tax certificate, is to pay taxes to your city. This is an annual tax registration which differs from city to city. It can range anywhere from $50 up to $200 approximately, depending on which city you are in. Your business tax certificate is going to be renewed annually with your city. The next type of tax is sales tax. If you're a business that is selling tangible products, or you are selling labor that is then utilized to create a tangible product that is sold to a customer, then you're going to be required to collect and remit sales tax to the CDTFA. In order to do this, you're going to need to obtain a seller's permit from the CDTFA. You're going to collect the sales tax from your customers or clients, and then you're going to be required to submit that sales tax payment to the CDTFA on a regularly scheduled reporting basis that will be assigned to you from the CDTFA. In most cases, either annually or quarterly, depending on your amount of sales. I have several full videos that walk you through the process of not only applying for a seller's permit, but answering several frequently asked questions surrounding the process and requirements. If you have more questions about seller's permits, make sure that you click the link in the video description down below. The next type of tax you're going to be required to pay is going to be income taxes. You are going to have taxable income that you are earning, and you're going to be required to report that on your tax return each year.
Now, if you have a net income in the amount of $400 or more in self-employed income, you're required to file that income on your tax return. Self-employed income is reported on Form Schedule C of your tax return, where you will note your income as well as your deductions.
Now, additionally, because this is self-employed income, you are not only going to be required to pay those federal and state income taxes, but you're also going to have to pay what is called self-employment tax. Self-employment tax amounts to 15.3%. So why do you have to pay self-employed taxes? Well, as someone who is self-employed, you do not have an employer. Now, an employer would withhold Social Security and Medicare taxes. However, because you are self-employed, you must do that yourself. Self-employed income taxes are going to be done on your tax return that you file in April.
Lastly, with income taxes, some self-employed individuals are going to be required to pay estimated quarterly tax payments in advance of the year that those payments are actually due. If you expect to owe a tax bill of $1,000 or more when your return is to be filed, then the IRS requires you to estimate the amount of tax that you are going to have to pay and to pay it out in advance. Now, if you're self-employed and you did not owe any income taxes, then this does not apply to you. However, this does begin the first year that you have a tax bill. Once you have a tax bill and owe that self-employed income tax, if you anticipate that you will have to pay $1,000 or more in the next year, then estimated income taxes apply to you.
The last type of tax that most small businesses are going to undergo is going to be unsecured property taxes. Now, this one may come as a surprise to many new, small, and specifically home business owners. In general, unsecured property tax is typically for business personal property, such as office equipment, whether it be owned or leased. Property tax rate for year 2021 was 1.1801%. Business property owners are required to file a property statement each year with the Office of the Assessor Recorder. This form is going to be mailed to your business address, and it can come as a surprise if you're not expecting it. My first year in business, I made a big mistake. I threw this form away. I didn't realize that it was tax that I had to pay, and I received a very large tax bill. What happens if you don't pay this? Well, if you do not pay your unsecured property tax form and you don't submit to them the information that they need in order to calculate it, the assessor estimates your property. What's wrong with that? This assessor has no idea what type of unsecured business property you have. They don't know how much office equipment or business equipment you have, and in most cases, they highly overestimate it. Lastly, if you're an LLC, then you're going to be required to pay an annual $800 California state LLC tax.
This annual tax is going to be due even if you are not actively conducting business or turning a profit. You have until the 15th day of the fourth month from the date that you file with the Secretary of State in order to pay this for the first time, and then it is
Okay, you guys, I hope that was helpful. I have videos on each specific topic that I talked about here in much more detail, linked in the video description down below. So if you have questions about a seller's permit, about sales tax, about self-employment taxes, etc., make sure that you If you own or are looking to start a small business in the state of California, you may be wondering, do I need a seller's permit in California for my business? This is a really important question because you want to make sure that when you set up your business, you have all of the proper registrations and permits in order to be compliant with your state and your county. Today, I'm going to cover exactly who does and who does not need to register for a California seller's permit. There are a few different criteria that you need to look at in order to determine if you must register for and hold a California seller's permit. Number one, if you plan on making 3 or more tangible sales within a 12-month period, then you are required to hold a California seller's permit. Once you are no longer making sales, then you must close it out. Number two, you need to look at if you are selling tangible or intangible products. Tangible products are going to be actual physical goods that you provide to the customer, while intangible products are going to be products that do not have any sort of a physical component. Now, there's a gray area here that confuses a lot of people. What if a customer or a client purchases services and there is no tangible product, but then later on down the line, those services result in the creation of a tangible product that is purchased later? In this case, if that labor is going to result in the creation of a tangible product, then all of that labor is taxable as well. An example of this would be if you are a photographer, your services that later on down the line result in the creation, printing, and sale of a photo album would then need to be taxed. Because you are obligated to pay this sales tax, you must hold a California seller's permit. The next thing that you need to take into consideration is, are you selling through the use of a marketplace facilitator? A marketplace facilitator is a third-party organization that technically handles the sales transactions for you, but very specifically, they also handle the sales tax. A marketplace facilitator is going to be not only a company that handles those transactions, but they must collect and remit the sales tax to the CDTFA directly. If the marketplace that you are using is collecting and remitting the sales tax on their own, that sales tax is collected, but it never comes to you, then they are a marketplace facilitator. An example of a marketplace facilitator would be Etsy, where Etsy is actually the one transacting the sales and collecting and sending that sales tax over to the CDTFA. If you're using a marketplace facilitator, you do not need to hold a California seller's permit and you do not need to remit additional sales tax. Why? Because the marketplace facilitator is technically the one transacting the sale and responsible for the sales tax. Keep in mind, however, that if you are utilizing a third-party platform such as Shopify or Squarespace, they are allowing you to create your own shop, transact your own sales, and you are responsible for remitting that sales tax. They do not remit it for you. If you're wondering if your specific platform is a marketplace facilitator, then all of these platforms typically have this information addressed in their frequently asked questions section. Go to their information and search for marketplace facilitator or for sales tax, and you should be able to locate this information. Now, some of you may be wondering, what if you only plan on conducting temporary sales, such as selling at a craft fair or a pop-up shop? What if you do not permanently need a seller's permit? You are still required to obtain a seller's permit. However, if your sales and your situation is going to be temporary, you can obtain a temporary seller's permit as opposed to a
regular long-term seller's permit. If you have questions on this, be sure to leave the questions in the comments. I am more than happy to check in and clarify on what is still confusing you about who needs a California seller's permit. For those of you who are ready to apply for a California seller's permit, I want to encourage you to click this video that is popping up here where I walk you through the process.
California seller's permits and California sales tax. These are two things that confuse entrepreneurs, sole proprietors, and small business owners. Today, I want to explain to you what you need to know as a small business about California seller's permit and California sales tax. California seller's permit is obtained through registering your business with the CDTFA, the California Department of Tax and Fee Administration. When you register for and obtain a California seller's permit, it then authorizes you to not only sell tangible goods, but also to collect and remit sales tax. In the state of California, you are required to collect and remit sales tax for all sales of tangible goods, as well as the sale of labor that then goes into a final tangible product that you have sold to a customer. The CDTFA has industry-specific sales tax guides. So if you're uncertain if a specific product or service should be subject to sales tax, then click the link in the video description down below, locate your industry, and find more detailed information there. It's also always best to check with a certified tax professional. Now, for those of you who do not need a permanent seller's permit but will be engaging in temporary sales, you are required to obtain a temporary seller's permit. These are going to be issued to individuals with no permanent place of business, and they cover a selling period of 90 days or less at one location. California sales tax amount differs from county to county. Current sales tax rates according to the county and city are all published online on the CDTFA. I'm going to link the guide in the video description down below. The state of California needs to receive this sales tax paid to them one time. That means that if you are someone that is selling tangible products directly to customers, you will then collect and remit the sales tax to the CDTFA. If you are someone that is utilizing a third-party marketplace facilitator, which is a fancy name for a website or a marketplace that collects the sales tax instead of you, then you are not required to hold a California seller's permit or to collect and remit the sales tax. Why? Because the California Marketplace Facilitators Act stated that if a marketplace is already doing that, they are already collecting the sales tax and remitting it, then California is happy. They do not need to receive it twice. So let's say that you are utilizing a third-party marketplace to conduct your sales. How do you know if you need to obtain a seller's permit and collect and remit that sales tax? Head over to that marketplace and search their handbook and online guides. Look for sections where they discuss sales tax and check and see if that marketplace is collecting and remitting the sales tax or if it is left up to you. If you can't locate documentation there, then look in your transaction history. Is the marketplace collecting and remitting the sales tax from the customer directly, or are they not charging sales tax at all? If that sales tax is charged, does it get paid out to you, or do they keep the sales tax themselves? For those of you who are not utilizing a marketplace facilitator that is handling all of the sales tax for you, you will need to obtain a California seller's permit. Obtaining a California seller's permit is free and the application isn't extremely complicated. I have a full video that walks you through each step of the application, so watch that video in the link down below as you complete your application. Once you have obtained your California seller's permit, then next you need to make sure that you are charging your customers who are purchasing tangible goods or labor that then results in the sale of a tangible good later on down the line. You will need to ensure that you are charging them the proper amount of sales tax. Use the link below in order to locate the current sales tax rates according to your county. Business owners can either charge a separate line on the invoice for sales tax, or you can incorporate it into the total price. What the state of California is concerned about is that you report to them all of your total sales that are going to be subject to sales tax and that you actually pay that sales tax. So it can be up to you if you decide to incorporate it into your total item price or itemize it separately. The next next thing that you need to know is that you're going to be required to remit that sales tax over to the CDTFA. In most cases, the CDTFA asks for you to send them over their sales tax quarterly, but it can differ according to the amount of sales you have, the type of business, etc. Check your specific information on your seller's permit and account login info with the CDTFA. When it comes time to pay your sales tax, you're going to log into your online account at the CDTFA. Click on through to their online filing system and you will be asked a series of questions about your sales for the quarter.
The CDTFA is going to assign a filing frequency for you with specific due dates. They either will ask for you to prepay quarterly in advance, to pay quarterly, to pay monthly, or to pay annually, based on how many sales you report and your anticipated taxable sales at the time of registration. The CDTFA is going to let you know exactly when you need to pay, as well as send you out reminders. You can locate this at the time of registration in the documentation you receive in your online account at CDTFA's website, as well as send in email reminders and mailed reminders. If you're required to file quarterly, then January, February, and March sales tax will be due at the end of April. April, May, and June sales tax will be due at the end of July. July, August, September sales tax will be due at the end of October. And October, November, December sales tax will be due at the end of January. For those who are put on a yearly reporting basis, your sales tax will be due by January 31st. In addition to reporting and paying your sales tax, you are going to be required to keep adequate sales records of any sales that you make, as well as any sales tax that is collected. Additionally, you're going to be required by the CDTFA to notify them if you change your business address, change the ownership of your business, add or drop a partner to your business, sell your business, buy another business, or if you discontinue your business, you are required to close out the account.
Okay, you guys, I hope that helped to take out some of the confusion surrounding California sales tax and California seller's permits. Now, if you need more information such as a full application walkthrough, specific Q&A regarding seller's permits, the Marketplace Facilitator Act, and paying your sales tax, click the links in the video description down below. For those of you who are starting or who own a business in the state of California, having a California seller's permit is an incredibly important step in the process for those of you that are selling tangible products. I am going to walk you through exactly who needs a California seller's permit and how to apply. We're going to go through the application step by step to make it simple, easy, and less intimidating for you so that you can get your seller's permit filed today. A California seller's permit is a permit that allows you to sell tangible products in the state of California, collect sales tax from your customers, and then requires you to file regular sales and use tax returns with the CDTFA and remit that sales tax that was collected over to the CDTFA. California seller's permits are handled by the CDTFA, the California Department of Tax and Fee Administration. First, let's talk about exactly who is required to apply for and hold a California seller's permit. A few different criteria that you need to look at in order to determine if you must register for and hold a California seller's permit. Number one, if you plan on making 3 or more tangible sales within a 12-month period, then you are required to hold a California seller's permit. Once you are no longer making sales, then you must close it out. Number 2, you need to look at if you are selling tangible or intangible products. Tangible products are going to be actual physical goods that you provide to the customer, while intangible products are going to be products that do not have any sort of a physical component. Now, there's a gray area here that confuses a lot of people. What if a customer or a client purchases services and there is no tangible product, but then later on down the line, those services result in the creation of a tangible product that is purchased later? In this case, if that labor is going to result in the creation of a tangible product, then all of that labor is taxable as well. An example of this would be if you are a photographer, your services that later on down the line result in the creation, printing, and sale of a photo album would then need to be taxed. Because you are obligated to pay this sales tax, you must hold a California seller's permit. The next thing that you need to take into consideration is, are you selling
through the use of a marketplace facilitator. A marketplace facilitator is a third-party organization that technically handles the sales transactions for you, but very specifically, they also handle the sales tax. A marketplace facilitator is going to be not only a company that handles those transactions, but they must collect and remit the sales tax to the CDTFA directly. If the marketplace that you are using is collecting and remitting the sales tax on their own, that sales tax is collected, but it never comes to you, then they are a marketplace facilitator. An example of a marketplace facilitator would be Etsy, where Etsy is actually the one transacting the sales and collecting and sending that sales tax over to the CDTFA. If you're using a marketplace facilitator, you do not need to hold a California seller's permit and you do not need to remit additional sales tax. Why? Because the marketplace facilitator is technically the one transacting the sale and responsible for the sales tax. Keep in mind, however, that if you are utilizing a third-party platform such as Shopify or Squarespace, they are allowing you to create your own shop, transact your own sales, and you are responsible for remitting that sales tax. They do not remit it for you. If you're wondering if your specific platform is a marketplace facilitator, then all of these platforms typically have this information addressed in their frequently asked questions section. Go to their information and search for marketplace facilitator or for sales tax, and you should be able to locate this information. Now, some of you may be wondering, what if you only plan on conducting temporary sales, such as selling at a craft fair or a pop-up shop? What if you do not permanently need a seller's permit? You are still required to obtain a seller's permit. However, if your sales and your situation is going to be temporary, you can obtain a temporary seller's permit as opposed to a regular long-term seller. After you obtain your California seller's permit, the CDTFA is going to issue you a reporting schedule. This is going to be the required schedule that you then must adhere to for filing your sales and use tax returns and paying that sales tax over to the CDTFA. This schedule differs. For some businesses, you're going to be on a yearly reporting schedule. For others, it's going to be quarterly, and there's a few other variables. The CDTFA will let you know what your reporting schedule is once you apply for and obtain your seller's permit. When it comes time for you to file your sales and use tax return, you are going to have to do this with the CDTFA online. I have a video that instructs you exactly how to do this linked in the comments down below. Keep in mind that even if you have 0 transactions, $0 in sales, you are still required to file this return in accordance with your reporting schedule. Because you're required to collect and remit this sales tax over to the CDTFA with your returns, you need to make sure that you fully understand exactly how much to charge for sales tax and how to set that sales tax aside in a separate bank account that you will not touch until tax time. Planning for this can be a little difficult, but it's incredibly important that you understand exactly how much taxes to set aside and not to touch it until tax time. This is why I always recommend creating a separate business savings account specifically for your tax money so that you are not tempted or make a mistake to utilize it. If you create a separate bank account and transfer all of your tax money into that account, it makes it so much easier to set it aside and leave it until it's time to pay your taxes. Now, the CDTFA has all of the exact tax rates listed on their website. I'm going to link this document in the description down below so that you can make sure that you are well informed on exactly how much sales tax to charge and set aside. Next, I'm going to show you the full application walkthrough online to get your seller's permit. I strongly recommend that you play this video while you are applying and pause it each step of the way while you complete the steps. It's going to make the process so much easier and less intimidating. First, you're going to go to the CDTFA's website at cdtfa.ca.gov. Right here, you're going to click on Register Online in the Register for a Permit section. Next, we're going to click Register a New Business Activity. You are going to then select that you are the owner of the business and click Next. Next, they're going to ask you if you have received a letter in the mail with a security code for the business to which you are requesting to access. In most cases, this is going to be a no. Next, you're going to enter in your information. Now, your identification type here, you can select which type of ID you would like to use, and then you will enter it in the next box. Next, you're going to enter in your last name, your first name, your middle name, and your title. This is all your personal information, not your business information. Next, you're going to select if you have an existing permit, a license, or account with the CDTFA, whether it be active or closed. So if you held a permit previously, then you'll select yes, or if you currently hold another one, then you select yes, and if not, you will select no. Next, you're going to be asked to enter in your primary address. So this is going to be your own personal address. This does not need to be the same as your business address. Next, you're going to be asked to enter in your login information. This is going to be the creation of a username, confirming the username, creating a password, creating a security question, and confirming your secret answer to that security question. After you've completed this step, click Next. Next, enter in your email and your phone contact information. Next, you will be asked to complete an authentication. So you're going to go ahead and select if you would like that to occur through text message, email, or both, and enter in the information here. From here, your account has been created. Next, we're going to go back to the cdtfa.ca.gov homepage. We're going to click Log In. Now, if you have not yet confirmed your email, your screen is going to look like this. You are going to need to go over to your email and click the authentication button that is sent directly to your email. Once you have obtained the code that was sent to your email, you can enter it in directly here. Click if you trust this browser, and then click Log. We have now created the account, but we still must complete and file the application for the seller's permit. In order to do that, on the right-hand side, we're going to click Register a New Business Activity. Next, we are going to select the first option here to apply for a seller's permit. Click Next, and on the next screen, you are going to be asked a series of questions about your business. Go ahead and answer them with a yes or a no according to how you would answer for your business. On the next page, there are a few additional similar questions. Go ahead and complete those, how they relate to your business, and then click Next. Next, you're going to be asked if the application is for the person or the entity listed below. This is going to show the person's name that has created the account here. Now, if you are a sole proprietor, meaning that you have not registered as a partnership, as an LLC, as a corporation, then you will select yes. However, if you have filed the registration to be an LLC or another type of business entity, you will select no. Click Next, and then you will be able to select from the list the type of business entity that you have, such as an LLC, a partnership, or a corporation. Next, you're going to be asked to provide all identifying numbers for your business. Now, if you are registered as an LLC, then you will have a federal EIN number. If you have not yet obtained an EIN number, you can do so for free in about 5 minutes over at irs.gov. The federal EIN number is required if you listed yourself as an LLC or other business entity that requires the use of an EIN. Additionally listed here is a state employer identification number. If you have employees and you have received an SEIN, then you can enter it in here. If you do not have a state EIN, then you may leave this blank. Next, you're going to enter in your California Secretary of State entity number. This is the number that was assigned to you when you formed your LLC or other business entity. If you do not have it on hand, you can use the Secretary of State Business Lookup tool, and you will be able to see that number on public record. Now, if you have registered yourself with the Secretary of State, but you do not have your Secretary of State number on file or on hand, you can go ahead and look yourself up at bizfileonline.sos.ca.gov/ /search/business. Go ahead and enter in your business name, and right below that you will be able to locate yourself right here. Here you can see the number that corresponds with your Secretary of State business registration, and that is the number that you need. Now, for those of you that have not formed an LLC, a partnership, or another form of business entity, if you are yourself just running the business on your own, then you will be a sole proprietor. Now, sole proprietors are going to see this screen, which looks a little bit different. Here, you're going to be asked for your primary identification type. You can select from various forms of ID numbers, such as a social security number, an ITIN, or an ID such as a passport or a driver's license number. Underneath that, you're going to see FEIN. This is a federal employer identification number, and it is not required for sole proprietors. You can leave this blank, or you can obtain a free EIN number from irs.gov. SEIN is also not required for sole proprietors because this stands for a state employer identification number and will apply if you have employees and have obtained one of these. You can simply leave it blank if you do not have one. You're going to enter in your secondary identification type. Go ahead and select whichever one you would like to choose from the list and enter in the corresponding number. Unless you are changing from one type of business entity to another, you will select No. Next, you're going to be asked if your business will be accepting credit card payments. Now, it's okay if you end up using different or a variety of credit card processors. They simply want you to enter this information in here. It doesn't mean that you're going to be bound to using this one forever. Next, you're going to be asked to add in your NAICS code. This is a business code that describes the type of business operations that occur within your business. Click Add Code, and then you may search for a keyword that represents the type of business activity that you do. Next, you're going to enter in if your location is for a temporary event. If you want a permanent seller's permit, then click No. Next, you're going to be asked for your business location. This is not your personal address. This is your business location. Next, you're going to be asked to enter in your doing business as name. In many cases, you may have registered a different business name from your own personal name or from the currently registered business name. Enter in whatever name you will be doing business under. Next, enter in the seller's permit start date when you would like the permit to begin. Answer yes or no to if you are buying or transferring an existing business. If you have additional business locations and you operate out of more than one location, then you can go ahead and enter yes and enter those in as well. But if you only have one business location, you're going to click no. Next, they're going to ask you for supplier information. You must enter in one supplier at least. It is okay if you do not actually end up using this supplier. It is okay if you end up using more than one supplier. They just want to have a record entered in here for a supplier that you plan to use. So go ahead and search whatever supplier you find online that you feel that you might be likely to order something from for your business. Next, read the declaration of intent and make sure that you sign it and click next. Once you have signed that and finished up the application, then the CDTFA will notify you when your permit has been approved. You can continue to check your online account for any updates as well. Okay, you guys, I hope that was helpful. If it was, let me know in the comments down below. Additionally, if you have questions, I am always happy to reply to your comments, so please make sure you ask them down below as well. Next, I want you to click on this video that is popping up on screen that has some important information regarding seller's permits. California seller's permits and California sales tax. These are two things that confuse entrepreneurs, sole proprietors, and small business owners. Today, I want to explain to you what you need to know as a small business about California seller's permit and California sales tax. California seller's permit is obtained through registering your business with the CDTFA, the California Department of Tax and Fee Administration. When you register for and obtain a California seller's permit, it then authorizes you to not only sell tangible goods, but also to collect and remit sales tax. In the state of California, you are required to collect and remit sales tax for all sales of tangible goods, as well as the sale of labor that then goes into a final tangible product that you have sold to a customer. The CDTFA has industry-specific sales tax guides. So if you're uncertain if a specific product or service should be subject to sales tax, then click the link in the video description down below, locate your industry, and find more detailed information there. It's also always best to check with a certified tax professional. Now, for those of you who do not need a permanent seller's permit but will be engaging in temporary sales, you are required to obtain a temporary seller's permit. These are going to be issued to individuals with no permanent place of business, and they cover a selling period of 90 days or less at one location. California sales tax amount differs from county to county. Current sales tax rates according to the county and city are all published online on the CDTFA. I'm going to link the guide in the video description down below. The state of California needs to receive this sales tax paid to them one time. That means that if you are someone that is selling tangible products directly to customers, you will then collect and remit the sales tax to the CDTFA. If you are someone that is utilizing a third-party marketplace facilitator, which is a fancy name for a website or a marketplace that collects the sales tax instead of you, then you are not required to hold a California seller's permit or to collect and remit the sales tax. Why? Because the California Marketplace Facilitators Act stated that if a marketplace is already doing that, they are already collecting the sales tax and remitting it, then California is happy. They do not need to receive it twice. So let's say that you are utilizing a third-party marketplace to conduct your sales. How do you know if you need to obtain a seller's permit and collect and remit that sales tax? Head over to that marketplace and search their handbook and online guides. Look for sections where they discuss sales tax and check and see if that marketplace is collecting and remitting the sales tax or if it is left up to you. If you can't locate documentation there, then look in your transaction history. Is the marketplace collecting and remitting the sales tax from the customer directly, or are they not charging sales tax at all? If that sales tax is charged, does it get paid out to you, or do they keep the sales tax themselves? For those of you who are not utilizing a marketplace facilitator that is handling all of the sales tax for you, you will need to obtain a California seller's permit. Obtaining a California seller's permit is free and the application isn't extremely complicated. I have a full video that walks you through each step of the application, so watch that video in the link down below as you complete your application. Once you have obtained your California seller's permit, then next you need to make sure that you are charging your customers who are purchasing tangible goods or labor that then results in the sale of a tangible good later on down the line. You will need to ensure that you are charging them the proper amount of sales tax. Use the link below in order to locate the current sales tax rates according to your county. Business owners can either charge a separate line on the invoice for sales tax, or you can incorporate it into the total price. What the state of California is concerned about is that you report to them all of your total sales that are going to be subject to sales tax and that you actually pay that sales tax. So it can be up to you if you decide to incorporate it into your total item price or itemize it separately. The next thing that you need to know is that you're going to be required to remit that sales tax over to the CDTFA. In most cases, the CDTFA asks for you to send them over their sales tax quarterly, but it can differ according to the amount of sales you have, the type of business, etc. Check your specific information on your seller's permit and account login info with the CDTFA. When it comes time to pay your sales tax, you're going to log into your online account at the CDTFA. Click on through to their online filing system and you will be asked a series of questions about your sales for the quarter. The CDTFA is going to assign a filing frequency for you with specific due dates. They either will ask for you to prepay quarterly in advance, to pay quarterly, to pay monthly, or to pay annually, based on how many sales you report and your anticipated taxable sales at the time of registration. The CDTFA is going to let you know exactly when you need to pay, as well as send you out reminders. You can locate this at the time of registration in the documentation you receive in your online account at CDTFA's website, as well as send in email reminders and mailed reminders. If you're required to file quarterly, then January, February, and March sales tax will be due at the end of April. April, May, and June sales tax will be due at the end of July. July, August, September sales tax will be due at the end of October. And October, November, December sales tax will be due at the end of January. For those who are put on a yearly reporting basis, your sales tax will be due by January 31st. In addition to reporting and paying your sales tax, you are going to be required to keep adequate sales records of any sales that you make, as well as any sales tax that is collected. Additionally, you're going to be required by the CDTFA to notify them if you change your business address, change the ownership of your business, add or drop a partner to your business, sell your business, buy another business, or if you discontinue your business, you are required to close out the account.
Okay, you guys, I hope that helped to take out some of the confusion surrounding California sales tax and California seller's permits. Now, if you need more information such as a full application walkthrough, specific Q&A regarding seller's permits, the Marketplace Facilitator Act, and paying your sales tax, click the links in the video description down below. It is October. It is October, which means that it is time for me to file my 2022 Q3 California sales tax. I'm going to show you exactly how to file your California sales tax on the CDTFA's website. If you don't already hold a seller's permit and you need to get that in place, then I want you to click the link in the video description down below where I show you exactly how to do it. In the state of California, you are required to hold a seller's permit and collect and remit California sales tax to the CDTFA if you make 3 or more sales of tangible products within a 12-month period. Now, you're going to be required to do this either on an annual or a quarterly reporting basis. This is going to be dependent on your own unique business, and when you apply for and are granted your seller's permit, the CDTFA will tell you exactly what that reporting schedule is. Keep in mind, you have to still file a sales and use tax report with the CDTFA on your reporting schedule, even if you didn't actually make any sales during that period. They still want to see the report of that $0 amount.
First, you're going to need to gather the number of your total sales that you made on products or services that will result in a product, and your amount of sales tax that you collected from your customers. Now, what I report sales tax on are my photography services and products, and I slowed those way down this year because I was focusing in other areas. So I only have a little bit here to report. To get my totals from the software I use to process my payments, next I'm going to log into my CDTFA account. If you do not already have a CDTFA account, then you can either utilize their express login over here on the right-hand side and use the code that they have sent to you with your notification to file your taxes, or you can create an account with the CDTFA. Down here, you're going to select the account that you're going to be filing the report for. Next, select the specific tax return that you intend to file, which is most likely up here at the top. You can see that I have processed a few of my sales tax reports late, and I have paid penalties for that. Sometimes life is just too busy. First, we're going to enter in the amount of total sales. Then below that, we are going to enter in the purchases subject to use tax. This means that if you had inventory that you purchased in the intent to resell and you did not resell it, you ended up converting it to either your own business use or personal use, then you must claim that here because you will be taxed on it. Additionally, you're going to be asked for any sales of business assets, fixtures, and furnitures that are associated with your business. Next, you'll enter in any sales at fairgrounds, And then this is going to be followed by non-taxable sales, which are going to be deducted from the amount of sales tax that you owe. And this is going to include sales to other retailers intended for resale, non-taxable sale of food products, non-taxable labor such as repair or installation, sales to the United States government, sales in interstate or foreign commerce, and sales tax that was included in your total sales reported. This is going to be the line item that many of you will enter in here. If you collected sales tax and that was included in your total amount of sales, make sure you enter in the amount of sales tax that was collected right here. This way, you will not be paying sales tax on your sales tax. Next, you're going to be allocating your amount of sales to the particular district where you made those sales. Now, if you're like me and you accidentally made a little error this time around and you inputted the wrong amount of sales tax in one of your invoices, then you are going to have an excess of sales tax, meaning that you collected more than you actually are supposed to pay. The CDTFA is going to have you remit and send over to them all that excess tax. Most likely, you will not see this screen on your own tax filing unless you made the same error. Next, you're going to see a summary screen followed by a screen to input your information. You're going to be asked if you're a paid preparer, so unless you are a paid professional tax filer, in which case you would not be watching this video, then you're going to click no. Next, click submit. And then you're going to be taken to this confirmation screen agreeing to these submission terms. Following this, you're going to see your confirmation here, and then you're going to see a series of options down below. The first option is the option that you will want to click on right away, which is make a payment. Here you will be able to either pay immediately or schedule your payment using a credit card, a debit card, a transfer, and you can schedule it to occur in the future. Lastly, you will want to make sure that you open this as a PDF and save a copy of the confirmation so that you have it for your business records.
Okay, you guys, I hope that was helpful. If you have further questions on your California seller's permit, then I want you to click the link that is popping up on screen right now where I go over a lot of those frequently asked questions. It's hard to bend. Close your mouth. Gonna put them on the floor.
Today I'm going to show you how to file your California sales and use tax return with the CDTFA when you had no tangible sales. Digital product sales in the state of California are not subject to sales tax because there's no tangible product. You will not be collecting nor remitting sales tax if you sell digital products in California. Now, some of you may hold a California seller's permit and you may have had digital sales. In that case, you will need to file a California sales and use tax return, and you will need to claim those digital sales, although you will not be paying sales tax on them. So I'm going to show you exactly how to do that. Now, the California Department of Tax and Fee Administration, where you obtain and file your reports for your seller's permit, requires that you close your account if it is going to be inactive. But if you plan on making tangible sales in the future, you still need to file a return stating that you did not make any sales in this current reporting period. At cdtfa.ca.gov, we're going to go ahead and click right here where it says File and Make a Payment. Now, if you have not already created a username and a login, then you're going to click Sign Up Now down here. Once you have signed up through their process, then you're going to go ahead and enter your username and password right here. To require you to send an authentication text or an authentication email. So go ahead and select which one you would like here. Now, once you have logged in, you will see your seller's permit accounts listed down here. Go ahead and click on the account that you wish to do the filing for, and then you're going to see all of your listed reports over on this side. Right here, you will have an action reminder right here that will tell you that your return is going to be due, and you can go ahead and click right there. Next, you're going to be asked for your total sales. This includes taxable and non-taxable sales. So if you did have product sales, however, your sales were not subject to sales tax, such as the sale of digital products, then you are going to go ahead and you're going to enter that information in here. Next, you're going to be asked about non-taxable sales, and these are going to be deducted from the total amount that is subject to sales tax. So for those of you that had digital product sales that you may have entered in on that last page, let's say, for example, you made $5,000 selling online e-courses, then you would have entered in that amount on the prior page. Here, you are going to enter in a deduction for that amount because digital sales are not subject to sales tax. Now, the one that's going to match the best for me is I'm going to select Other, and then in the description, I'm going to add digital products. Then I'm going to add in the amount of digital product sales. We can see here that I have $0 total tax due. Now, if we did owe any sales tax here on this page, it would be where we enter in the districts that the specific sales took place in, where they were sold and shipped to, or where they were purchased in, because this is going to apply district taxes that differs from each and every district that those items are sold in. Because this is a $0 sales tax report, I'm going to have zeros here. Next, sign the declaration of intent stating that everything you stated here is true and correct. This is then going to give you your confirmation screen. Make sure that you save this as a PDF for your records. And if you are someone that does owe a payment, make sure that you don't stop here. Make sure that you click on the Make a Payment section right here.
Hey guys, it's Jenny Silver, and today I want to talk to those of you who have recently obtained a California seller's permit, but now you're wondering what to expect, how to stay compliant, and what your tax obligations are, as well as a myriad of other questions that you most likely have. I'm going to go through with you the information that comes directly from the CDTFA, the California Department of Tax and Fee Administration, and talk you through some of these important things that you need to know once you have a California seller's permit. If you don't already have a permit, or if you're not even sure if you need one, then I want you to click the video that I've linked down below where I talk through all of those important application steps, who needs a seller's permit, and those preliminary questions that come before you actually obtain the permit. This video is dense, so I have chunked it out in the timestamp menu so that you can see where your exact questions can be located in this video. But this information is really important, so if you're able to watch the whole thing from start to finish, then I would highly recommend that. Once you obtain a California seller's permit, you then have a list of several obligations that you must comply with as a holder of a seller's permit. Number one, you're required to report and pay sales and use tax returns. Even if you do not have any sales in your business, you still are required to file a return stating that you had 0 sales, as long as you are a holder of that seller's permit. Number two, you're required by the state to keep adequate financial and business records.
The CDTFA gives a list of what your records should include. They state that your records should include normal books of accounts, so bookkeeping, the financial records of your business, documents of original entry, such as bills, receipts, invoices, job orders, contracts, or other documents that support that bookkeeping, on all schedules of working papers used to prepare your tax returns. Your records should specifically show gross receipts. And gross receipts means the overall total sales of all sales or leases of tangible personal property, even sales that you may consider to be exempt from tax. They should also show all deductions claimed in your filing returns and the total purchase price of all tangible personal property purchased for sale, consumption, or lease. The CDTFA states that you should keep these records for 4 years, and in some cases even longer, such as if you are being questioned, audited, or in the middle of a dispute.
Next, you're required to notify the CDTFA if you change pretty much anything within your business. This includes if you change your business or mailing address, if you change ownership of your business, if you sell your business, if you buy another business, or if you discontinue your business or need to close out your seller's permit. Next, let's talk about what is taxable. As someone who holds a seller's permit who is selling tangible products, you are going to be required to remit sales tax to the CDTFA.
Retail sales of tangible property in California are generally subject to sales tax. Examples of personal property include items such as furniture, household goods, toys, clothing, etc. In addition, service and labor costs are also subject to sales tax if they are a part of the sale of a tangible product, such as the charge for the photography services that then later on down the line resulted in the creation and sale of a photo album. In some instances, retailers must pay use tax rather than tax. The most common example of a purchase that is subject to use tax instead of sales tax would be an item from an out-of-state retailer for use in California. Out-of-state retailers who are engaged in business in the state are required to collect use tax whenever applicable from the consumer at the time of the sale. Now that you hold a seller's permit, you are able to collect sales tax directly from your customers. Although you're required to pay and report sales tax to the CDTFA, you may be reimbursed by your customer for the amount of tax that you owe on a sale. For example, if you are required to pay $1.75 in sales tax to the CDTFA, you may pass that cost on to the customer, provided that it is agreed on as a part of the sale. It can either be a separate line item in their invoice or receipt, or it can be worked into the overall price of the product. You are responsible as the seller for paying the correct amount of sales tax to the CDTFA. If you do not pay the correct amount, the additional tax plus any penalties and interest will be charged to you. So how do you know how much sales tax to charge and remit to the CDTFA? What tax rate do you use? The sales and use tax rate does vary statewide. The state has a base rate, and then there's an additional district tax rate dependent on where your business is located. The statewide base rate is 7.25%. Unless you're in a special taxing jurisdiction where voters have approved additional district taxes. Many of these districts encompass the entire county-wide area. However, some districts are limited to a single city. Special taxing jurisdictions can be located and viewed at cdtfa.ca.gov and by clicking on the tax and fee rates section. So what about those of you who make sales to customers that are out of state, but your business is in the state of California or in a different district? The CDTFA states that local sales tax is allocated to the jurisdiction where the sale occurs. They state here that if only one place of business of the retailer in this state participates in a sale, the sale occurs at that place of business. In terms of internet sales, the CDTFA states that internet sales are treated just like any sales made in retail stores. Therefore, your retail internet sales that take place in California or are for delivery in California are generally subject to California sales or use tax. The CDTFA states that the responsibility to collect and remit sales and use tax exists in online sales unless you are participating with a marketplace facilitator. A marketplace facilitator is a third-party marketplace that collects and remits the sales tax on your transactions instead of you. The Marketplace Facilitator Act back in 2019 changed this law so that all sales of tangible merchandise that are facilitated by a marketplace facilitator means that the seller themselves are no longer required to be registered with the CDTFA for a seller's permit because that third-party facilitator is collecting and remitting the sales tax instead of you. They state that you as a seller are no longer considered the retailer of your sales of tangible merchandise facilitated through a marketplace. As long as that marketplace facilitator is registered and remitting the sales tax themselves to the CDTFA. What about if you make drop shipments on behalf of out-of-state retailers? Are you then liable for sales tax? The CDTFA states that if you make drop shipments to California customers for out-of-state retailers, then you are not liable for tax on your sale to the out-of-state retailer if that retailer holds a valid California seller's permit. Many of you may be charging delivery and handling fees along with your tangible sale. Are those shipping charges and delivery fees, are those taxable as well with the CDTFA? As long as the delivery charges are clearly stated as a separate entry on the invoice or the bill of sale, then those delivery charges are not taxable. However, if you did not separate out those delivery charges as a separate line item and they are not clearly listed, then in that case, they are taxable because there is no way to separate the purchase price from the delivery price. Now, some of you may be making sales, but then collecting the payments for those sales later on down the road. For those of you in this situation, the CDTFA states that you must report a sale for the tax reporting period in which the sale itself occurred, even if you received the payment later on. And for those of you who are selling gift certificates, the CDTFA states to not include the sale of a gift certificate in your sales and use tax return. However, you do report the sale that occurs when you accept the gift certificate for a tangible product later on down the line. If you make an error and you collect too much tax from your customers, you're required to do one of two things. Number one, you can return the excess amount that you collected back to the customer, or number two, you can remit that excess tax over to the CDTFA. Next, let's talk about filing your sales and use tax returns. Once you create an account with the CDTFA, you'll be able to log in there and access all of your unique information for your own business and seller's permit. The CDTFA will assign you a reporting schedule. This can vary according to the business, how many sales you have, and a few other factors. If you did not make any sales, you do not owe any sales or use taxes, then yes, you still must file a tax return. When it comes time to file your sales and use tax return, simply log into your CDTFA account and click on the date that you need to file. This is going to then walk you through a series of different pages asking for information regarding your sales and other relevant information. For a full tutorial video walkthrough on this process, click the link in the video description down below. Now that you have a seller's permit, let's talk about whether or not you need to obtain other licenses. The state of California issues a seller's permit to grant permission to individuals that are selling or reselling tangible products. So is a seller's permit the same as a business license? The answer is no. There is a big difference. A seller's permit grants permission for businesses to sell tangible products. Now, a seller's permit does exactly what it says. It grants you permission to sell products. A business license, however, grants you permission from your city to be in business. The two are not one and the same. So there are going to be additional licenses, permits, and maybe even some specific industry-specific registrations or licenses that you need to obtain. Obtaining your seller's permit is just one piece of the puzzle. So head over to calgold.ca.gov where you can enter in your city, state, county, and industry and get a list of exactly what is required and where you can obtain that documentation. Next, let's talk about other taxes and fees that you are obligated to pay. Sales tax is just one component of your taxation requirements through running a California business. Sales tax is the amount of tax that you must pay to the CDTFA on those tangible sales. It is not the same as income tax, it is not the same as self-employed tax, and it is not the same as an LLC tax. You're going to have other taxation requirements based on where you live and what type of business you run, which is why you need to watch the next video popping up on screen about the 9 different types of taxes that you need to expect in the state of California for your business. Today, I'm going to show you exactly how to print your California seller's permit in just a few easy steps. Now, if you have not yet applied for your California seller's permit, then make sure that you watch this video, which is linked in the video description. We are going to be logging into our account over at cdtfa.ca.gov. Now, if you already have an account with the login and a password, then you can enter that here. If you do not yet have a login, you're going to click this blue button down here, and you are going to create a login. Right here, click Create Login. This is going to walk you through a series of questions in order to set up your online account. Go ahead and select the type of government ID that you would like to provide for your personal information. Then go ahead and answer the questions about your own personal information and your business, and you will create the account. Once your account has been created, you can go ahead and log in. You will then see this or a similar dashboard, which is your CDTFA business account. Here you will be able to locate the different seller's permits that you have under your account. You'll notice any important notifications here, such as I have a little orange marker down here indicating that I have a sales and use tax return that is due at the end of the month. Locate the account that you are trying to print the permit for and click on it. Next, click on Locations. Underneath Locations, we are going to locate the blue button that says Print. Then we are going to select the location that we would like to print the permit for. In some cases, businesses may have registered more than one location. Select the location and then this is going to open up. This is the permit that you will print. If you have a business in California and you are selling tangible products, figuring out exactly how to calculate, charge, and pay sales tax can be confusing. Today, I want to share with you the CDTFA's regulations on charging sales tax in California in a clear, easy to understand way in order to help you understand your sales tax obligations as a California seller. First, I must give the disclaimer that I am not a tax professional and this is not tax advice. Please use this video as a resource for pointing you in the right direction in terms of accessing California's public information on sales and use tax filing. Always consult a tax professional. California sales tax is filed through the CDTFA, the California Department of Tax and Fee Administration. You are required to obtain a California seller's permit, file and pay sales and use tax returns if you are selling tangible products in California, if your products are housed in a California warehouse, or if your customers are receiving their items in California and you meet the minimum sales threshold. Obtaining a California seller's permit is relatively easy and free through an online application. I have a full tutorial video on registering for your seller's permit, which walks you through each step, linked in the video description down below. Once you hold a California seller's permit, you are then allowed to charge your customers sales tax. This can be done either as a separate line item or lumped into the total sales price of the item. In California, digital product sales are not subject to sales tax. Tangible products and the labor charges that will result later on down the line in a sale of a final tangible product are subject to sales tax. Once you have your seller's permit, it can be confusing to determine how much sales tax you should be charging your customer and then will be obligated to pay to the CDTFA. Implementing a tax software like TaxJar can be a very easy way to simplify and demystify the process. This software imports your transactions and uses the data from the sales to calculate sales tax that will be owed and keep tabs on when you are reaching the threshold to be required to hold a seller's permit and file sales and use tax returns in each state. Each state has a different threshold and rules when it comes to obligations surrounding seller's permits and sales and use tax returns. This can get complicated, and it is truly a great investment to have a software such as TaxJar to monitor your compliance in the state. And no, I am not sponsored by TaxJar. It just makes things a million times easier. In California, retailers located outside of California are required to register with the California Department of Tax and Fee Administration, file and pay California sales and use tax returns if the total combined sales for property for delivery in California by the retailer and all persons related to the retailer exceeds $500,000. Retailers with a physical presence in California are still required to be registered with the CDTFA even if they don't meet that $500,000 threshold. The physical presence requires you to be registered. Examples of a physical presence are going to be maintaining inventory or an office at locations in California, having representatives in California for purposes of taking orders, making sales, doing deliveries, installation, etc., and leasing equipment, including a computer server in California. When it comes time to calculate your California sales tax, you need to first understand that sales tax is made up of two parts: the statewide sales tax rate and a separate additional district tax rate. Most locations add on this additional district tax rate, and each location has a different rate. This is why each district has a different sales tax rate. The sales tax rate is determined based on where the product is delivered to the customer. For in-person stores, this will be your business location. For businesses shipping items to customers, this will be the location the product is delivered to the customer. The CDTFA has a tool that you can use in order to enter the address where the product is going to be delivered to the consumer and find the sales tax rate there. When you file your sales and use tax returns, there will be a step in the process to note where your sales took place, and the district tax will be automatically calculated based on the amount that you enter in for your sales in each location. However, it's important to know these tax rates in advance so that you can calculate the exact amount of sales tax due from your customer at the time of sale. If you overcharge your customer in terms of sales tax, you will be obligated to either return that amount to the customer or send it to the CDTFA. For those of you who are utilizing a third-party platform to make your sales, you may not be obligated to collect and remit sales tax because this platform does it on your behalf. Platforms that collect and remit sales tax for you are known as marketplace facilitators. When you make sales on a marketplace facilitator, the sales tax is collected and remitted to the CDTFA, but it never enters into your hands. The marketplace facilitator calculates, collects, and sends this instead of you. It's really important to understand if you are selling your items on a marketplace facilitator or if you are simply selling them on a different sales platform that is not handling the sales tax for you. Keep in mind that just because a platform calculates the sales tax for you, it does not necessarily mean that they are the ones sending it to the CDTFA. Make sure that you thoroughly understand if the marketplace you are using is in fact a marketplace facilitator or if they're merely calculating the sales tax and sending it over to you. New marketplace facilitator legislation states that you are not required to register with the CDTFA if all of your sales are done through a marketplace facilitator. However, this does get very complicated because if you have an established business presence within the state of California, including simply having items held in a California warehouse, such as through Amazon FBA, then California does actively pursue notifying you and charging you penalties for not being compliant with being registered with the CDTFA. If you are not certain if you should be registered with the CDTFA, number one, call the CDTFA. They respond to questions fairly quickly and will be able to answer your questions over the phone directly. Number two, consult with a tax professional. Contacting a CPA, an accountant, or a bookkeeper that specializes in California sales tax is going to be able to get you the answers that you need and make sure that you are legally compliant. And number three, if you are in doubt and you are a business that holds a business presence in the state of California, then registering with the CDTFA will mean that you can then file sales and use tax returns that do not actually require you to pay sales tax because you will merely be noting that your sales were conducted through use of a marketplace facilitator, and you will not be paying that sales tax a second time. Today I'm going to show you how you can purchase wholesale in the state of California and how you can get a California wholesaler's license. First, what is buying wholesale and how does it work? In the state of California, sales tax is required to be remitted to the CDTFA on the sale of tangible goods. It is charged at the time that the goods are sold to a customer on the retail level. This means that because the sales tax is collected on the retail level, the store, business, or vendor selling the products to the customer can obtain those goods wholesale, meaning that they are not required to pay sales tax on the initial purchase of the products they are stocking. Additionally, oftentimes wholesale retailers offer additional or bulk discounts on their products for businesses purchasing them, which also provides an additional benefit to purchasing wholesale. So, do I need a license in order to buy wholesale in California? California does not require any business to take out a wholesale license. Other states, however, may. Instead, those who are offering wholesale items for purchase in stores, boutiques, or retailers who are purchasing wholesale items in order to sell them to customers must obtain a seller's permit. A seller's permit is a state license that allows you to sell items at the wholesale or retail level and to issue resale certificates to suppliers. Issuing a resale certificate allows you to buy items you would sell in your business operations without paying sales tax to your suppliers. Once goods are purchased on the wholesale level, you then must issue a resale certificate. Issuing a resale certificate allows you to buy items that you will sell in your business operations without paying sales tax to your suppliers. The CDTFA has a template for creating a resale certificate. So you will simply fill in your information and provide this document to the wholesaler who you purchase from to avoid paying the sales tax. So can you skip the sales tax at retail stores if you issue a resale certificate? The answer here is sometimes. Retailers are not required in the state of California to accept your resale certificate and waive the sales tax, but they are permitted to do so if they so choose. In addition to obtaining a seller's permit and issuing a resale certificate, you must also properly register your business as your state, city, and county requires. To make things simple, I'm going to give you the exact step-by-step you will need to follow for the entire process in order to buy wholesale. Please note that this is a generalization, and each county, city, and industry may have its own requirements. Check calgold.ca.gov for your exact steps for your own county and industry. Number 1, choose a business entity type. The simplest and fastest, if you are just starting out, is going to be selecting a sole proprietor. Next will be to determine what business name you will be operating under. If you are a sole proprietor, you may operate under your first and last legal name without any changes, without doing any additional paperwork. However, if you choose to operate under a different business name other than just your first and last legal name, then you will be required to file a fictitious business name statement. This is also known as a doing business as or DBA. Next is getting an EIN, an employer identification number. You can use your social security number in lieu of an EIN, but an EIN is free, more professional, and safer for personal protection. Number 3, get a California seller's permit. You'll need your EIN listed on this document, so get that first. Number 4, get a business license, known in the state of California as a business tax certificate. On this application, you will need both your EIN and your seller's permit number, so complete those steps first. And number 5, using the CDTFA's official template, fill in the information anytime you make a purchase that will be used for resale and provide that certificate to the wholesaler. Also keep a copy for your own personal records. Lastly, I want to go over a few important tax and legal notes. If you use a resale certificate to purchase an item but do not end up selling it, your state requires that you pay consumer use tax on the taxable item. This is generally paid at the time that you file state income taxes, but you will want to make sure that you consult with a CPA. It's important to note that the seller could end up with a misdemeanor charge if they issue a resale certificate in order to avoid collecting sales tax from a buyer, and this charge can come with a fine of $1,000 to $5,000 and or imprisonment for up to 1 year. So make sure that this is done only for goods that are intended for resale and are resold. Next, click the link in the description in order to download these steps as an easy checklist to help guide you through the process. And lastly, click on the video that is popping up on screen right now where I will show you the exact steps involved in obtaining a California seller's permit. For those of you that own a business reselling tangible goods, you will want to issue a resale certificate in order to have the sales tax waived when you buy your items that will be resold. In order to do this, you will need two things. Number one, you will need to hold a valid California seller's permit so that number two, you can then create a resale certificate to pass over to your wholesaler, which will allow them to waive the sales tax. In prior videos, I walked you through all of the steps needed in order to obtain your California seller's permit and what to expect after you obtain one. In today's video, I'm going to show you exactly how to create a resale certificate step by step. The CDTFA issues a California resale certificate template. You can access this template easily online at cdtfa.ca.gov. I have the link to this exact template included in the video description down below, but keep in mind that the CDTFA does update this template periodically. Now, in order to create a resale certificate, you must be a California seller's permit holder. This is where you're going to enter in your seller's permit number. Your seller's permit number can be located on the actual paper copy of your seller's permit or over in your online account area at cdtfa.ca.gov, which once you have logged into your online account with CDTFA, you're going to go down here and click on Sales and Use. Next, you're going to go down here and select the location section. From here, you will be able to click on Print Permit. Next, select the proper location and click Print. This is going to give you a copy of your seller's permit. Your seller's permit number is located right here at the top of the document. Next, you're going to type in what type of tangible personal property your own business sells. Next, you're going to type in the wholesaler that you are purchasing from right here. This is the company that you are buying the products from that you don't want to pay sales tax on. So you're going to type in that company's name right here. Number 4 is a statement here that you are agreeing to resell the items listed here and that you are still responsible for those taxes, either at the point of sale with your customer or later on through sales and use tax if you do not sell the item. Section 5 is where you include a description of the property to be purchased for resale. This is going to be where you describe the items that you are buying wholesale from the company that you intend to resell. Section 6, you need to agree to the legal disclaimer here regarding misuse of a resale certificate and the fine associated with that. Under name of purchaser, you're going to enter in your own name because you are the person purchasing the wholesale items. Next, you'll provide your signature here under signature of purchaser, or your employee or authorized representative can also sign. Below that, you're going to print the name of the person whose signature just signed above and include the title. If this is yourself or your own business, you most likely will include the title of owner. Next, you're going to include your address here. This can be your personal address or it can be your business address. Because you are the purchaser, you're going to include your own address here, followed by your telephone number and the date. Now, once you have completed the resale certificate, you're going to do two things. Number 1, you're going to save a copy for your own business records. Number 2, you are going to send a copy to the wholesaler that you are purchasing products from. They are legally required to obtain this resale certificate from you in order to waive the sales tax, and they will need to verify your seller's permit number that you provided on this document. I want to outline the 20 key steps that are imperative to starting, building, and scaling a profitable modern business in California. To celebrate the start of the new year, I'm going to give away a free download of my comprehensive PDF guide, The California Small Business Roadmap. You can download this for free right now by clicking the link in the description down below. This is a 20-phase guide, so there is too much content to cover everything in one single YouTube video, but today I want to briefly go over the outline of the 20 phases that I have found to be imperative in building a successful modern business from the ground up. Phase 1, planning your business. This includes things such as choosing your business's type and what you sell or offer, defining your target customers, choosing a business name, creating a business plan, deciding the type of business structure you will be, and consulting with an attorney and a CPA. Phase 2 is registering your business to make sure that you are compliant with your state, city, and county's legal requirements. Phase 3 is getting business finances in order. This includes things such as opening business checking and business savings accounts, choosing and starting a bookkeeping method, planning to set aside enough for income taxes, planning for sales taxes, calculating your cost of doing business, and creating and determining your pricing and services guides. Phase 4 is ensuring safety for yourself and your business. This includes obtaining all proper business insurances that you may need, getting an EIN instead of using your social security number, and keeping your IP address and home address safe. Phase 5 is branding your business. This includes creating a comprehensive, overarching feel for your business that will communicate a strong message and really reach your target clients. Phase 6 is establishing an online presence. This includes things such as creating a website, a blog, social media accounts, YouTube accounts, Pinterest account, and many other places. Phase 7 is getting your systems in place. This includes items such as setting up business management software, obtaining contracts from an attorney or contract templates, setting up a mailing list, considering different types of systems that you can utilize within your business to simplify and streamline workflows and systems. Phases 8 and 9 are getting your social media accounts set up and optimized, as well as getting active and planning your social media content. Phase 10 is capturing leads online. How will you find those online leads, draw them to your business, and actually capture their contact information? Phase 11 is search engine optimization planning, making sure that your online presence is the best that it can be for making sure that your clients are able to actually find you through search engines. Phase 12 is diversifying your income, setting up multiple streams of income within your business beyond just one simple service or product. Having a diversified income ensures that all of your eggs are not in one basket should something go wrong, and you'll be able to expand your profitability. Phase 13 is creating a digital product, which will then be used later down the line to generate passive income. Phase 14 is beginning affiliate marketing, allowing you to join different platforms and become an affiliate member in order to earn commissions on referring products and services to your clients and audience. Phase 15 is getting sponsors for any content that you are creating online in order to generate another stream of revenue. 16 is moving from trading your time for money to earning more streams of passive-based income. Phase 17 is simplifying your workload, identifying tasks that you do not need to do personally so that you can use your own personal time to grow your business. Phase 18 is outsourcing and hiring. Phase 19 is bringing on professionals to do the tasks that you and your employees and assistants are not best suited or trained to do. And Phase 20 is scaling your business, creating sales funnels for your digital products, e-courses, and other streams of passive income, upgrading your systems to be the most streamlined and most effective, creating opt-in pages, landing pages, email sequences, and upsells, creating a system to run ads to funnel people into those programs on autopilot. Download the PDF right now so that you can see all of the steps within each phase and start wherever your business is at and have a clear path forward to growth. Let me know in the comments down below if the PDF guide was helpful to you, and if so, what steps you're going to